Intro to IS audit. Mostly when we are talking about the IS audit, we're looking at three different things. Determining the first thing is whether reliance could be placed at the entity. Basically, what we're looking at IT general controls, because that is what we call either the border or the fence around information systems, especially it will be concentrated on Unit 3, Information Technology General Controls. One level, when you go down, is the applications. That is what the business actually uses to deliver services and use. So the application review is a specific also. You look at the inputs, what controls have the inputs, the processing of the systems, how it processed, whether it's reliable or not, and then the outputs. Those are mostly the applications, the controls that you look. But also when you're looking at applications, you will still have to look at some of the IT general controls that are specific to that in applications such as security, change management, business continuity, operations, and all of that. So it's almost two layers. The first layer is the general controls that all the applications use, whether it's a business application or whether it's a corporate application such as HR. And then the application itself, you need to understand what are the internal controls and input, processing, output, but also you need to understand the specific controls or ITGCs that are specific to that applications, like who gets access to, how security is dealt with, application security. So those are different layers. First, this could be a network security. Secondly, would be application security. So it's the same thing with change management. One is how the corporate deals or the entity deals with it, and another is how that specific application deals with it. So you need to understand those two differences. Thirdly, nowadays, especially, you might be called in if you are an IS audit or if you're dealing with IS audit. It is not only their area, other financial auditors also might do it, but increasingly nowadays, you might also do computer-assisted audit techniques or data analytics related items. So those are mostly the main three tasks IS auditor might be requested to do. Standards, guidelines, and frameworks. Those are also things that we will cover today and in these areas. IntoSci is one of the areas or the groups that issues guidance for IS auditors, just like normal financial auditors, because IS is part of the audit nowadays. So if you look at ISSI 5300 to 53999 series, it has a lot of guidance for IS auditors. You guys, and definitely Pakistan is part of it. I know it's part of the SSI and the IntoSci, so you understand. I won't go into elaborate. It's the entity that all the SIs are members of that also helps them standards and guidelines. ISSI might have also had multiple languages. I'm not sure if Urdu is one, but definitely you will get it English, Arabic, French, Spanish, all of those. Another entity, which is mostly the one that does the actual accreditation for the information systems auditor, is ISACA, Information Systems and Control Association. The CISA is the certification that the IS auditors get. ISACA is the one that and does. Just like any other body that is accreditation, then the individual's ethics, independence, objectivity, due care is also part of the requirement for IS auditors. And then they also set performance standards, which is how to perform the IS audit standard. Then there would be also guidelines that would be included. COBIT is a framework actually that ISACA produces. COBIT is not for the auditors, actually it is for the entity. So once you already know, or in other words, if I say, that's what I always used to say in my audit, COBIT is an actually useful framework for you to understand. Because if you haven't, if they don't have, at least you would have to set yourself expectation. This is how it should be. And then it's always easier for auditors when you have a standard or guidelines to audit against it, because whether it either meets or not. So if an entity doesn't have an information systems organization like a normal entities you would have later, we will see COSO, then COBIT is your framework to say, okay, here is how you're supposed to be. This is how I'm going to grade you, or how my expectation would be. So it's a governance framework that established how it is, and it has been ever changing. So you could look at the latest ones. It provides specific controls on specific areas, and it provides how those areas should be managed and governed. So it's very useful framework for IS auditors to understand in order for you to apply COBIT. ISO is another organization that does multiple standards, but parts that are specific to IS audit or they use is the 27,000 series, which is also ISO and information security audits. And a lot of entities you will see, they will say that we are ISO certified. Mostly what they're talking about is that they have went through a process of establishing ISO, and then auditors come in and certifying that they are ISO qualified. Mostly 27,000 is the security deals with, but you also have a 31,000, which also deals with risk management. So again, it's more of a governance, trying to set up to see it. Mostly ISO, what it does is it's not more technical. It's the documentation. It is the controls. It is the policies and the procedures. So it established a robust governance and policies and procedures, structures, and internal controls it requires. So once those do exist, the expectation is that those controls would be tested by the IS auditors. Also, 19,000 or the quality management is another that an entity could get established that might impact or affect information systems audit. So you need to also be aware of it. Entity comes and you will see these certificates over there, then you know what the expectation is or the standards. Just as I was mentioning COBIT, once you already have a framework or a standard, you know what to look for. The expectations are already set for you. Whether they, your question then becomes whether they meet or not evidence that needs to support. We'll talk about evidence gathering later on, or at least, go ahead. The IEC is the information systems. The 27 addresses in general, but then once you go to serious, once you go to 27 1000, ISO is the main. IEC is another that jointly approved and gets. A lot of countries also use ISO. When ISO is setting up, a lot of national standards board participate ISO's in standards. So IEC is one of the participants that almost like co-presents the standards. There's a multiple national standards that go along sometimes with ISO. And when they're building, ISO doesn't just come on its own. They use the existing national bodies sometimes to institute or to bring a standard into being. Yes, 27.1, 27.2, because one sets the organization, the process and security. The second one, 27,002, provides specific controls on the specific areas. Yeah, one is basically the organization and the structure, the policies at high level. The others is very specific. So when the auditors come in, 25,000, as you could see, is the risk, deals with risk management within the information security. 27,000 is the auditors now who would evaluate that. So each one of them on the series do have a specific area that is concerned with. Yeah. So when the auditors come in, at least each one, they know what to test and what to see, whether it meets the standards or not. And then the others are completely different. 31,000 is risk in general. The 27,007 that, no, the 27,002 or the 27,005, that's information security risk management. But 31,000 is risk management in general, not only information security. Like the 31,000, if is the entities applying risk management, what do we call enterprise risk management? So ISO is another standard that you need to be aware of if you are doing information systems audits, especially sometimes if it's the risk management they're doing or the information security and they say they've already been certified, then now you know what the standards they're supposed to be adhering to. So you could keep them, and then if there's any weaknesses or if they're not meeting, then you could include it into your audit findings because they've already been certified and you already know what the standards are. As we said, the 33 controls across. Sure.
What I get is that this ISO 27007 specifically for ISO auditors, and rest of the 27,001, 25, they are for information security managers.
Yes, but for the 27,007, it's not only for ISO and auditors, it is for whoever is certifying the ISO. It's the auditors that certify ISO for the entity. But for the ISO audit, all of it is concerning you because you want to know what the standards they're supposed to be meeting, then you will examine whether they actually met or not. So you're becoming at the second, because the 27,000 mostly is for the auditors that are certifying them. They have to enlist, you have to get also specific certificate, ISO certificate as an auditor to certify ISO standards. There are also different frameworks for information systems audit. ITAF is ISACA and driven. It's a guide of how to design, conduct, and report an audit. This is very useful for IS auditors. This is what you use day to day. You could have a specific work programs, but all based on ITAF. I mean, if you go to ISACA, you will see it. I mean, whether you are auditing SAP, Oracle, there might be some guidelines of how to do it, whether you're doing a change management or system development. So it's all based on ITAF. So that is ISACA and driven. There's also an ITIL, mostly used by the operations people. Also, those are all useful, as I said, if you are doing security. There's also NIST is another one, which is not mentioned here. I think it's a US standard or framework. ISO 27,000 is framework. So if you're doing a specific area, it's good to understand those standards. Or if the entity already said we are following those frameworks or standards, at least you know what to hold accountable against or what to evaluate against. So it's good for internal, information systems auditors to understand those different. ITIL, mostly if you're doing help desk, change management, development, all of those a lot of times might be used. Or if they're not using it, you could use it as a standard for you to at least say, okay, here is my expectation. They don't sometimes have to use, but it's always easier, as I said, for auditors to have a standard to evaluate against. So you set the expectation and then you say, okay, here is at least minimum of what you've expected to do. COSO is another framework, but this is mostly in general framework on management that the auditors in general, financial auditors have been using a lot. Again, as I always say, these frameworks are mostly not for the auditors, but it's mostly for the management to adapt. But it's very helpful for the auditors because it gives you a set of values or set of expectations to evaluate against. So mostly COSO, you're talking about different levels, control environment, risk assessment, control activities, information and communication, and monitoring activities. You guys are familiar with COSO? COSO is set up what they call by committee of sponsoring organizations. If I'm not mistaken, it's about back in the 80s when there was a problem with big entities in US. I think it was Congress that set it up, the committee. And then what they came up, and especially nowadays, it's even more relevant. What they came up with these bankruptcies and the problems in the big corporations, they say, no, we need some type of governance around how an entity is run, regardless. So that is why they came up, a group that has been set up as a committee came up with this framework. So this is a governance framework. Control environment mostly talks about what they call the entity level. What is the tone at the top? What is management doing to enforce the rules, to set the rules, meaning at the management requirement or the board requiring policies and procedures to come? Is there any strategy? Is there any structure that is known? Is there roles and responsibilities? Yes. It still exists, but initially it's been set up by the Congress, but it was a private entities that work from academia, the businesses themselves, to create a governance that an entity could be relied on, because what they wanted is responsibility. They say, okay, how these problems occurred, especially if it's fraud or if it's bankruptcies, how nobody knew this is coming. So that is why you could see communication is important from top to bottom, and then the monitoring. Are you monitoring what you're doing? How entity doesn't know these problems until they happen. Mostly it was from the US, but as a best practice, people would say, okay, if this is a framework, because when they designed, it wasn't designed for US, it was designed for any entity that needs to be governed. What are the requirements or the areas that needs to happen? So first they say it's the control environment, which in this case, as you could see also the way that they have subdivided, it's an entity level issue. Mostly another word to say that is the tone at the top. What is the board and the executive management is setting? The goals, the strategy, how to achieve that, policies and procedures. And are they communicating? So once they set it up, is it only going to sit on the board or in the shelves, or are they communicating with the whole of the organization? How communication is happening, weekly, daily? Also, is the strategy being communicated? Are the goals being communicated to everybody or to the concerned people? Control activities is actually at the operational level where actually activity is happening, is at controlling activities. That is where auditors also come in, isn't it? That's where we look internal controls. Information and communication, as I was mentioned, that is how what is being set up at the top is reaching down. Monitoring is basically, are they monitoring the activities, whether it's fulfilling the policies and procedures, meaning compliance, targets and goals, KPIs. So if you don't monitor, then you wouldn't know what is happening. So this is mostly a framework for any organization to say, okay, and I have seen it, organizations, you go and you say, okay, we do the delivery, but if you're not monitoring, how do you know whether it had happened or not? So monitoring becomes a big part of it, to set goals and then monitor whether those goals have been met or not. If it's not, or if there is no monitoring activity in place, even within, as I was saying, even within IT audit or information systems audit, monitoring becomes a big part of it. And I have issued findings saying management does not monitor its own activities, because within that organization, IT alone as a department, you do have a structure. You have security, most likely, whatever way the structure is, but the functions would be there: operations, security, and then you have either development and on another side also business continuities. If we only take security, if you're not monitoring intrusion, if you're not monitoring who tried but didn't get, if you're not monitoring what we call exceptional incidents, security incidents, how do you know then the magnitude of the problems that you're facing? Operation is the same thing. How many people had a problem with their laptops or desktops? How many people had an issue with their passwords that always keep calling and say, I need to change my password? If you're not monitoring, you don't even know how much resource you need. Maybe there's only one guy on help desk and 1,000 people are calling him. It's like, how would you expect him, that person? If you're not monitoring or if you're not documenting these things, you wouldn't know the resource required or the issues that needs to be fixed going forward, or how to update your systems or your processes even sometimes. Risk assessment was another area that they have come up with, because they said if you didn't assess the risk and have a mitigation plans on place, then that is where the problems also arise. So COSO in general is for the organization, it's not for the auditors, but it has become a good tool or a good framework to know by the auditors, because once you know how an entity should be, even if they apply it or not, your expectation is that, okay, a good entity should be having a tone at the top. They should have a risk assessment or risk management process in place. They should have controls in place, internal controls in place. They should be communicating the policies, the strategies, and the tone of the top. They also should be monitoring their activities. That's a framework that you could use for any entity that you're auditing. Audit evidence collection. We'll talk about this quickly. We're gonna have a tea break soon, maybe at 10:30. Audit evidence collection. This is a vital on audit. You guys are more experienced. You guys know about it, because whatever you plan, as sometimes they say, it's more of a bridge. Whatever you plan, if you didn't document an evidence, then your conclusions cannot be. So it's a vital component of the also information systems auditor, as it says, whether the audit entity data aligns with established criteria. We talked about the criteria already. Frameworks, standards, guidelines, those are your criteria. As an IS auditor or as an auditor, you will see, and that's why I kept repeating, it's easier when you already have a framework or standard, either they met or they haven't met. So evidence collection is basically saying, okay, here, this is my expectation with this standard or framework. Here is the evidence that I collected, either they met or they didn't meet. If they didn't meet, then that is where you'll have to reach a conclusion or an issue of finding. Careful consideration must be given to the type of evidence required to meet your audit objective. So we will talk about the different ways of testing, and also you're familiar, but it's similar to what you would have done in information systems audit or financial audit, I meant. Taking into account various levels of reliability, as I said, the way or the type of test that you conduct has a different weight on it, on how you could be relied upon. Any questions so far? That's perfect. That is where you come in and you decide. As I said, the same thing I have done. A lot of entities that I have audited, especially like in UAE, at first did not have any standard setup. So COVID would be like a general one to look at for when you're looking at specific areas like information security. You could use ISO 27000. If you are looking at operations, you could use ITIL. They don't have to meet it to the nth degree, but for you, it's a framework, isn't it? Like almost like a minimum. Like if somebody is running a help desk, you're supposed to have a way to log in the request. You're supposed to have a way or a standard to say, okay, are you categorizing even? Not only to log the issue, but categorize the issue. No, you're not going to say you're not compliant, but you will say there is a weakness in this area. You're not, because since they haven't adopted, only when they adopt something, then do you say compliance come in. But if not, it's still what you're looking is internal controls. So that you will say there is a weakness in this process, because what you're looking is the function of IT, isn't it? And then when you go down level, let's say security, then the assertions that I have mentioned, the confidentiality, integrity, and the availability, those are what you're looking at. So ISO 27000 gives you the framework for you to look at, but you wouldn't say they're not compliant to ISO 27 because they weren't to begin with. But it gives you a way for you to look at and to identify the weaknesses. The same thing with like ITIL if you use. Yeah. The weight is different. I'll tell you the reason, and we will come to it later, but I'll quickly tell you. Interviewing is a one way of getting an evidence, but it's not the same way as a documented evidence. So those are what we say the weight is different of varying types. Some of them you will have to what we call corroborate. So if I interview, I might also observe. So those two kind of add up. But observation alone might not be, or interview alone might not be weight. But if I interview and then observe, now I could corroborate whether what I have heard actually exists. Exactly. Like if there is a documentation, then it leads to further. A lot of times, and the problems is when you are actually saying what you're mentioning, like if they haven't adapted, and they will tell you the interviews like, okay, we don't have this, and you observe, there is no document to look at because they don't have that process in place. Like a help desk, a lot of times they will say, okay, one guy does it, there's no log. People call me, they have a problem with their laptop, I go and fix. There's no evidence whatsoever. So you have to observe. The only thing you could do is observe. So you say, next time, let me know, or you sit next to him, depending how frequently people call him. Or if there's an email, at least there is a trace. But I have seen people just using the phone saying, we call, he comes in. So you don't have an evidence or documented evidence in that case. Interview and observation is your only way of doing those. But in any rate, anytime as an auditor, you will have to write it down your own. You have to always have your own evidence. Today, on this hour, I've met so-and-so, the title of the person, and what your interview or the discussion. Always have your own notes. And that is what goes in. Observation, the same thing. On this date, on this, I've sat with such and such, observed him or her doing this. Now you have your own documentation of when this has happened and what has transpired. Direct observation is one way. So now we're talking about the different ways of getting, or what we call different testing methods that you could do. Document is another, whether initially you are looking at, as you've mentioned, policies and procedures or standards. So if they say the policies sometimes specify certain requirement, strategies, goals, all of those could be documented. So initially you review, so this kind of sets for you where the what they need to meet. But then later also the documents could show you if there are documented evidence whether this have been met or not when you are doing re-performance. Interview is another way we've just mentioned, or inquiry, asking people whether they actually meet the policies that you've wrote or the strategies. They will tell you if they meet. From there on, you document, and then you will verify. As you said, that leads you to basically say, okay, show me how you're doing it, verify it. One way, if they don't have a documentation, is observation. If they have documentation, is actually saying, okay, how frequently it happens, you selecting a sample of documents and then investigating or inspecting those documents, whether they meet what you've already looked at, the policies, the standards, or the strategy. Now also it comes, the type also depends, the independence of the person you're asking. A lot of times you guys are very familiar. If I'm doing an independent confirmation of a receivable that's outside, because the confirmation I'm getting from outside, that's much more reliable than if I'm asking the accountant who's responsible for the receivable. So a third party always is much more reliable than the person who's involved, because the person he has a stake on it. Quality of the evidence, exactly, in this case. So the reliability depends now of where that information is coming from. So independent confirmation is a pretty good one. Technical specifications and config, a lot of times that's what we say is like systems don't lie, or the data or numbers don't lie. So if you wanted to know if there is a standard for password length or complexity, instead of asking the person, you could basically say, go to the setting, give me a screenshot. That's much more reliable than what they tell you. It's like that we have a 8-character, we request capital and all of those. So rather than asking interviewing person on those technical terms, such as password parameters, it's much better to just go and say, okay, go to the Active Directory or go to where the configuration is and give me a screenshot of those. The same thing with databases, other user interfaces. If you could get configuration screenshots, or for yourself, yes, but the screenshot is for you to document. Just as I said, for you to know the interviews. Whenever you are looking at configurations, it's better to take a screenshot. So it is for your own documentation or for your own record keeping. Audit test procedures, be it control testing or substantive testing, then you will have to decide how to verify. That also is very independent of the person, because it's already documented, it's passed, then you will be able to look at it. Or even if it's substantive, then expectation is set by you, not the person, the auditee. So when you collect those different types of evidence, or you conduct the tests, you collect the evidence, what you are doing is you're gathering, you will have to analyze, then you will have to come up with the result, whether they meet or not. Sometimes you take a sample, 30 out of 2 of them might not meet. What does it mean? Also, that depends on your expectation of whether they're supposed to be 100% or whether you allow certain error. So that's another thing about whole statistical thing about expectations of the internal controls or the error rate and all of those. But basically what happens is when you document your evidence gathering, you will have to analyze and come conclusion or result based off whether they met or not, or that is where your findings come in mostly. And be it on interviews, observations, documentation, inspection, or outside confirmation, then you will have to analyze and say, okay, does it meet my expectation or not? Your expectation, as I said, mostly is set by either the entity, their policies and procedures, by standards, as we said, or guidelines. That is where you will say, okay, in your example, you will say, you wouldn't say if they were not initially said we are ISO, now you say there is a weakness in security. You wouldn't say or mention a standard that they themselves haven't set for themselves. But you could still, when you analyze based on the evidence that you gathered, you could still say there is a weakness in this, or there is an issue on this area. That makes it easier. That's why I said internal policies and procedures or internal standards will make it easier for you to say, okay. Absolutely. That is where initially I think they were saying documents, such as policies and procedures, standards, guidelines. So it includes outside standards is fine. If not, then policies and procedures always override, because that is what they committed. The entity itself committed those policies and procedures. So those will override yours, or what you would expect. Like if they didn't have a specific standard that they were following, that is basically a guide for you to consider. but their policies and procedures is the first, and also government law and regulations, because those, it does not have any, if they are under those laws, that automatically becomes your area to look at or to evaluate against. Compliance is that's why I said even IS audit, always compliance is part of it, because I remember in UAE they had few, initially when we went, they didn't have laws specifically on IS audit, but as they progressed, I wouldn't take the credit, but the government have issued a lot of laws. Business continuity was one of it, or disaster recovery. So business continuity became an issue for it. Security came, and then there were entities that were responsible that issue standards of what it is that you're supposed to do. Then we followed those, the laws, the standards, and the guidelines. So if Pakistan has similar things, then that automatically become, you will add that definitely into your plan that they have to meet. If they don't, then you will say there's a deficiency or weaknesses in those areas. Even if it's a guideline, you'll say because it's an authority within Pakistan, if it issued, then they're supposed to follow it, the government entities. Yes. Say it again. By law only becomes if you are taking a case in front of a court. But as I've mentioned, initially by COSO, but also by other standards, or by, as he said, they set it themselves, the policies or the procedure or the standard, then it does not meet their expectation. Like if it's the government, then the government expects certain activity to take place, then you're not meeting. If it's internal policy, then management expect that to happen. It means, remember COSO, they're not monitoring. Now the audit came in, you came in and say, okay, this is your policy, you're not actually meeting it. Compliant with their own standard or with the government expectation or the government regulation or law, yes. Audit evidence collection. Determinants for evaluating the reliability of the audit evidence. So we've already mentioned if it's independent, meaning if it's outside, it's more reliable. Evidence obtained from external sources are much more reliable than evidence obtained by the person or by the entity themselves. But that is depending on if that evidence exists or not. So always a third party or outside is much more reliable because they don't have any interest in lying to you. Qualifications of the individual also comes in handy. Basically, does the person know what?
When they come, they give a report, it is quite superficial to treat the that government auditors know much better because of the whenever third parties engage, I think
here third party doesn't mean third party that is doing evaluation. Third party entity.
Yes,
no, he, yes, but what it means is who have, take the example that I said, if on telecom, they have accounts receivable. Confirmations from individuals or the other entities that are, or water supply or electricity supply, of the people who actually owe the money is the person that you wanted. If they say 1 million is owed by a company, a production company, electricity supply. If that company says we owe, it means we are supposed to pay that money. But if it's government telling you that, or if it's the telecom, government telecom telling you that somebody owes us money. Yeah, so those what I meant, not a third party that is also doing either audit. Internal audit, sometimes you could make some reliance or other third parties, as you said, that provide assurance, but those are very similar, as you said, than what you would. It's how much reliance you want to put. That is also depending on the environment. Yeah, that depends on the environment. But sometimes you're supposed to, based on the, how would I say, there's a word in audit that you're supposed to not be, what you're supposed to audit, the person should not be easily known at one time. So you have to keep changing it. So if you rely this year, the external on area, next year you should not be relying it, or every other third year you should be testing on your own and say, I'll test it. Yeah. Yeah, you should not be predictable in audit, because once you become predictable, they will get ready. Exactly, it's like a rotation. So you'll have to basically say not only rotation on the area, but what you're supposed to also look at has to also be rotated. And predictability have to be built in, basically. And you shouldn't be predicted of what you're supposed to look at, because they will get ready for you if that's the case. You wanted something that's naturally happening, because audit always comes after the fact, isn't it? So you need to say, okay, give me that. That's why your sample supposed to be either random or ad hoc. You shouldn't be saying, if they know that you always come on the 30th of the month, always the 30th would have a perfect documentation. But you're supposed to say, give me 15th, give me the 1st. Different days that they shouldn't be expecting you will audit or you will look at. Yeah. So the independence here, mostly, it could include, but mostly the ones that are heavy is the one that is part of the transaction. Is much more, but that's independent of the entity itself. The individual qualification of the person that you're talking definitely comes into being in simple ways or terms or layman's terms. Does the person know what they're talking about, basically, or for you to take a reliance on what they're saying? Objectivity of the evidence also is very important. Timing of the evidence is also important. Does it translate the time that you're doing the audit? Because if your annual audit, you're looking at an evidence that is outside of that, wouldn't give you any help. Because for government audit, if you're looking at the budget for this year, I need my evidence to be within this year. And in general, it might give you an idea of the internal control if it's outside. But again, we're talking about the weight here. The weight would have been different if it's within this year, because I know I'm taking reliance of how they are conducting their business on this year. Yes.
First about independence of provider of the evidence.
Yes.
In my perception, the stakeholders connected with an organization, they are not that independent. They have their own prejudices. For example, the client, the service delivery that a client expects from the entity may be far more than a reasonable level of service. In client's expectation, the service delivery is very bad, for example. But actually, we see it objectively that in moderate level. In that, for example, we conduct interview of the client, and client says that the service delivery is very bad. So whether that evidence will be independent, because it also includes prejudice of the client that it can be the vendor, the supplier.
Okay. Remember what I said in regard of an auditor. Whenever you're looking, it's not an open-ended. It's not like I'm going to a customer and saying, is the service okay or not? Before I go to the service, I need to know, is there a contract between the provider and the client? And is there any performance expectation? You look at outside client, as I said, electricity, maybe. Is there any contract such as that? If it's not, then your question, if there is, then you already have a standard you are evaluating against. And the evidence you're expecting the customer is to see whether that standard has been met or not. Because it's not their prejudice, it's a standard that you already have, whether it's policy or a contract that says this. because you don't want to get that from the provider. You want to get that from the person who's supposed to be receiving that evidence. It's outside of the provider himself. Another that is sometimes local within the entity, I'll tell you. It's either by law or by department. If they say, let's say payroll, if they say we pay every time the 30th of the month, you don't want HR to tell you that. Either you ask if they send it to the bank, then you say, okay, bank confirmations is easy. If they are actually sending all into one bank or others, or one bank, and then they're moving it to everybody's bank, it's outside and it's independent. Or you could ask the employees themselves. Another example that's also internal is, as I said, help desk. Sometimes help desk, they would have IT. If you call, if your issue is desktop issue, we will solve within 24 hours. You could look at the evidence from their end, because the person might opening ticket and close within 24. And I have seen that. And you call a lot of call centers. Without solving your issue, they want to close that ticket right away because they have a performance of 24 hours. But when you ask the client, the person who called, have your issue been resolved? Now you could trace, no, he might say, no, I called again. He will tell you, so now you have 2 tickets on the same issue. So the third party, as you said, it's not only biased on themselves, but you have to initially have a standard or a contract that they have to keep. Then you could ask the third party what they want to. Yes.
How can I get evidence from a third party? Like I'm auditing their account, they would give me
What they collected.
their data, and that's from them. That's the that I have. How can that by defining for the party?
The government. Okay. So the entity in your side is the revenue collection, isn't it? Or the land revenue. Okay. Who is paying them? It's the public who's paying them, isn't it? It could be companies, individuals. So if I want to verify something, I'm not going back to them because I already get information from them, isn't it? They've collected, let's say, 1 million money from company A. I need to call company A and say, okay, verify that. Or especially, again, that is where it is, if they owe money, if it's receivable, which better, would I be confirming to the land revenue? No, because I get that there is a receivable of that amount. I need to call the person who's supposed to pay and say, do you owe this money? So that is where the third-party verification comes in. Yeah. Any other question? We're still in the audit evidence collection. As we've said, and we've just came back to it. So one of them is reviewing the standard or the contract, whatever I am evaluating against. It's not about the person. So that I have to have that first, whether it's by framework, standard, whether it's ISO, whether it's a contract within a service provider, or whether it's, so I have to have something that I'm evaluating against. I always say auditors always love something that's clean. It's easier to, so you have to establish that first. It could be law, it could be contract, individual contract, it could be a performance contract, it could be a standard or a guidance. Have something you are evaluating against. That makes it life easier. Yeah. No, but it has to be something that they are accepting. In a tangent, let me go on a tangent. There are audits in the private that is called agreed upon procedures, or internal audit we call consulting. It's nothing other than you agreed with the client what controls or what their expectation is. Or there is another, and I think CPAs does another one. Big companies, if there is a third party who provides, I used to do this a lot. Now they've changed the name. It used to be called SAS 70. Now it's like SSAE 16 or something like that. It's the service provider. Nowadays, a lot of things are outsourced, isn't it? So you guys are public, but if you move in thinking into a private company that you're auditing, and some of their services that they're relying is outsourced. How would you get comfort over that outsourced in service or work? So what used to be done, and then maybe that service, whether it's a call center or something, they don't do it for one company, isn't it? They do it for multiple companies. They cannot allow 100 companies to come and audit them. So what they have agreed is, we will call Pricewaterhouse, KPMG's, or any public accounting firm, because what they do is specific, isn't it? Call center, let's say, it doesn't matter whether it's GM or credit card or whatever. This is the type of service we provide. You come and audit us, and we will distribute this report whoever needs it. So that is another way of getting auditors to think about it. So that is very important a lot of times, to have a standard. So it could come from different ones, whether it's a commitment. In that case, it's a commitment that they say, isn't it? We have ABC, we are doing it. So you expect certain controls to exist or certain activities to take place. So you could rely on. Exactly. So you will have to have a framework or certain things that you're evaluating against, either whether they committed or whether the government committed to them. Or, as we said before, if they don't have, you should expect how an entity is supposed to handle this. As we said, COSO, that's where it came from. Even if they didn't do it, you'll say, okay, my expectation is of a well-run entity or companies, let's say, to have a policies and procedure. Because again, that is where it all starts. That's where what we say is the tone of the top, isn't it? An entity that doesn't have a government regulation, that doesn't have a standard that they committed, how are you evaluating them? You have to have your own expectation. You're not going to say law number so-and-so, you're not saying standard so-and-so, but now it becomes your expectation, or meaning what we call a prudent auditor. How an entity is supposed to be run. That's where COSA comes in, isn't it? What is the tone of the top? Does the entity have policies and procedure? Do you think without policies and procedure, it could easily function? If that policies procedure is not communicated down, because how would the person to the lowest or the middle know what their expectation is? Organizational structure, responsibilities, roles and responsibilities, job descriptions. If none of these exist, then how would you? So that's why I said you will have to come up with your own expectation to evaluate against. If it exists, easy. That's why the laws and the standards exist. If not, you will still have to audit them. That's where COSO and others came in. NIST, everything, even if it's IS audit. But you are not going to say that they're not confirming with NIST. You'll say this is a deficiency or weakness because you set that expectation now. Majority of them, I used to actually do it. And people might say, especially in the government, there is no law that says I have to do this. I've heard too many times. There is no, because government always only require compliance with the laws. But you could flip the coin and say, yes, but if there is a risk, now you go back to ISSI 1315, as I said, about risk management, isn't it? Understand the entity, understand their risk. Now we're talking about the risk language. You say, there is a risk. So whenever you have a finding, you always have to state what is the risk if they're not doing this. So you put it more on the risk framework. You say deficiency because you're not mitigating this risk, or this might happen because you're not doing this. Go ahead.
But they have just, they have not readily made the standards or the KPIs and policies and regulations for their application. And audit auditor goes there and start regular. Since there is no policy, they have to go that the standard of ISO NIST and etc.
Yes.
We have to rely, ISO auditor has to rely on those. But don't you think that there are so many standards and the recommendation given by the auditor will be overwhelming?
No, and yes. Yes, meaning you don't go to the level of details. Let's say if it's a NIST or ITIL, you don't go to that level. No, meaning that if they don't have any operational manual, if they don't have this, first thing first, isn't it? As an IS auditor, I'll come and say, you really need to put together policies and procedures for these areas. So that is the first thing, because if they don't have that, there's no way for you to evaluate what is below that. And then you could give them ideas. Mostly for me, I don't put it in writing. I could say easily say if they don't know, but since you're an expert in this area, you could say, go look at ISO, go look at NIST. Doesn't mean follow, but you could take an idea for you to develop your own policies and procedures of what it's up to management to decide what they want to remember. At the end of the day, it's cost, also cost effectiveness, how better to address what they need. Small entity, government entity that has a couple of hundred people is not the same as an entity that has thousands of people. They cannot have the same type of policies. So you will let them, but what is important, as you've mentioned, is for them to have a policies and procedures that guide the IT if they're just initiating. So that is where you come in. That's where the added value is. You say, as they're moving from manuals, you will say, please consider putting standards, putting policies and procedures of guiding, let's say, who gets, because before if they used to use paper and now it is who supposed to get access to the system. Secondly, is you're not determining, secondly, you say what type of access they are getting, because that's also important, because if everybody has the same access, then it's free for all. It doesn't make sense. Access mostly it's least to know, only need to know basis. So those are the things that you could easily tell them, and they're supposed to do it. You will come and you will observe as they go along. Any other questions? Second thing is, as we've mentioned, just this last discussion is the organizational structure. So if they are going, even IT itself, does it have an org structure? Different departments, who reports to who makes decisions? Reviewing documentation, meaning if they already have policies and procedures, if they have standards, then you will review those procedures. Policies and procedures, right there is number 4. 5, interviewing people. So once you understand this, now you go ahead and try to collect the evidence. So one of the ways, the most formal starting point is you interview people, whether it's at high level understanding of the entity or whether it's a unit. You will interview people because you've set the expectation. You already read the documents. You know who reports to who and what the structure is. The structure also is supposed to show you the roles and responsibilities, their job descriptions you could take and read. Now you already formulate your own expectation. Now you start the collecting the evidence. Interview is a way of collecting evidence. Walkthroughs, we call walkthroughs, could be both interview and observation together because you're spending a lot of time with the person doing their work. And then you will do the performance, observing process and employee, that is observation. And then you will request document and you will reperform, or you will see and inspect these documents. In some cases in accounting, reperformance meaning you will calculate the same thing and you will see if the totals are equal or if the work seems to be the same. So that is like a cycle of how you do the audits in regard of gathering the evidence. Reperformance is, it's not that you're doing the job, but it's the type of test that you carry. If the totals of, let's say, receivable, if I took a subset and I wanted to do the confirmations, I call them the totals and I'll see if I come up with the same totals that they gave me. So I could pick up, now I'm reperforming that job. I'm not only taking from them, isn't it? I called each and every, or I send a letter to each and every customer on my sample, and I see if that total equals the total that they gave me on their report. So I just reperformed that work. So that's a reperformance. Other tests are basic inspection, do they meet or not? But if I'm actually gathering evidence and comparing to the evidence that I received, that's a reperformance.
Same number. So one was in and the other one was for
Yes, exactly. So you do the same thing, and then you compare what they tell you or the documents that you receive from them and what you already have. Absolutely. When people do inventory check, that's a performance because they already did inventory. They tell you, isn't it? You do your own inventory. That's a performance. You are double checking it. So anytime you do similar to verify the evidence that they have given you, that's a performance test. So this is more of a recap of what we are talking, just to give you a high level of what the planning is and the points that we've just reached. Initially, we said starting IS audit project. So the step one is what we're basically going to do next today. In general, we talked about how to collect evidence, types of evidence, IS audit standards. But now we're talking a little bit, not different, but similar, but you will see where it actually fits. This is a methodology of how to carry. Remember, we just said the audit. Starting your IS audit project, basically meaning selecting the entity, realizing how big that entity is, selecting maybe a manager to run it, that selecting the dates, but now it's a tentative, isn't it? You don't know how many people you would need. You don't know how long it might take you, but this is just the start of the IS audit project. Determine the IS audit universe. Universe, when we say whether it's mostly also internal audit jargon, it is any auditable unit within that entity or within that ministry or government entity. Determine IS audit universe. When we say IS audit universe, meaning information systems auditable units. So basically understanding all the assets, information systems, what applications are they using, what is automated, what is not automated, what networks that they are in, how many printers are there. It's not for you, but you're basically trying to understand in general what the capabilities of that organization is. As I said before, when you are doing the first step, you might only assign the manager, isn't it? You don't know how many people would I need in this. So the audit universe kind of gives you an idea of the entity and how big it is. I'm not talking about printer and saying how many people are there, what applications are there, do they have a data center themselves or they rely on someone else? Just gather a general, we will talk about later, idea of the magnitude of their information systems. This is how you reach scope, because this is the beginning of trying to determine the scope. Because the scope size becomes later. Initially, this is the scope comes next. This is first you saying, okay, trying to understand the circle that you're working on. The scope could be very limited. Understanding is once I know what I'm dealing with, then I could do a walkthrough, initial walkthrough. So that is where the understanding comes in. So then I will go into scope. Audit universe is not for analyzing. The scope, yes, but when I want to, audit universe is basically I'm gathering the information. Audit universe is basically every auditable unit or every auditable item. Then I will decide what I'm going to audit this year, isn't it? That is where the scope comes in. And before I decide that, I will do the walkthroughs. Then I will know, okay, HR has a system, finance has a system, petroleum and procurement have a system. That is audit universe. I'm just gathering the information. And then every system I will ask, do you have your own server? Do you have a database administrator, the people who are also involved? So you are looking at the systems. So basically you could say software, hardware, and the people who are working on those and who are responsible. Now, at least I understand. That's why I say universe. I understand the field. Then within that field, then I will decide this year, what is my focus? Is it the corporate, maybe procurement, HR, or is it the service delivery or the core business of that entity? Exactly. You basically, how would I say, scoping, or as they say, you're trying to understand basically what is there. Initial walkthroughs, that's what we call entity level understanding, and that is where the understanding of the environment. So you basically have an interview of those different people who had, what do they do? Like say procurement. They say, okay, we have a system, SAP system, this, but the whole year they do two purchases. You know, then even if you are covering how many people, because there's only 2 transactions the whole year. Or you could ask them last year, have you done it? Maybe 3 last year, this year. Then you will know the magnitude of that system. Even if it's SAP, I'm not going to spend a lot of time because there's no much of a function that goes through. Yeah. So yes, perfect timing. You made the decision. We'll leave it in here. We'll have a quick tea and then we'll come back. Okay, we'll start again where we left off. We've talked about basic understanding of what an IS audit is, what are the requirements of the IS auditor. We've talked about the what guides the IS auditor, be it standards, frameworks, guidances. We've talked about evidence gathering and types of evidence, how to gather evidence, meaning the types, the weight that you put on each type. So those are all more of a prerequisite or introduction. Now we talk about, from now on, we'll talk about the rest of how an IS audit is planned. Mostly in these days, what you do is a risk-based audit. So we'll talk about what that means. These 3 steps basically are the life cycle of an audit. The first one, or the step 1, is the planning. Step 2 is the execution. Step 3 is the reporting. So the rest of today, we will talk about step 1. So we will go through the IS project. We'll talk about how to determine IS audit universe. We'll talk about how to do an understanding of IT environment, and then we'll talk about the preliminary risk assessment for the rest of the day. As we said, the audit planning, basically you will have to understand the client and its environment, especially in this case, we're talking about the IT or the information systems environment. When we are talking about internal and external factors affecting the organization, as we've just talked about, whether it was confirmations or whether it was what an entity does, that's really important for you to understand. In just a minute ago on a side conversation, we're saying, even if you have the same audit universe, the same, let's say 3 things, if we make it easily, software, hardware, and people, it depends on the client, what mandate that client has. In your case, it's a government client, isn't it? It's different between Ministry of Defense, Home Secretary, Electricity, Telecom. Even if they have the same audit universe component, what changes is the actual mandate, where we go back, what constitutes, what risk each has would be different, even though the components might look the same. So the risk, exactly. So the risk is different. Once the risk is different, you understand the mandate and what they're supposed to deliver, the audit universe, you put those two together, then you will come up with the new risk, isn't it? Then that comes where your audit objective would be identified. So in other words, that is basically what we're trying step by step to explain for the rest of the day. Organization selection and application of policies and procedures, that is where they decide what standards that they want to keep, or sometimes it's given to them by the government mandate, or what we call the establishment law, or the subsequent laws that governs that entity, ministry, or parastatal. One critical things that we've mentioned already on COSO, remember, was the monitoring. If management is not monitoring, if you're not measuring the organization's performance, then audit or the IS audit or audit in general have a role to come in and identify the weakness and say whether what is expected or the mandate has been achieved or not. Audit planning. So part of the audit planning, as we've mentioned, is when you collect the audit universe in regard, or we will go to the audit universe, but when you are understanding the process and you take the mandate or the establishment law, now you will have to identify the risk. So this is basically trying to explain when you're identifying the risk, you will basically, there's two things that are important, the likelihood and the impact. The likelihood something could happen. Is it high, medium, or low? And if it happens that, what would be the impact? A lot of times the impact, you could put it as qualitative or quantitative. The quantitative part, you could just create a number, meaning money-wise, and say, okay, this is, I consider high, medium, but this is not at the individual level. This is at methodology or standard level at the, what do you call, Pakistan Audit and Auditor General's Office. You will have to decide a methodology for risk assessment. Exactly. So IS would probably be the same thing when you're doing information systems. So you will look at the systems, as I said, you combine that system with the mandate, then now that makes a difference. So that's what I said, the same assets, when you combine with the mandate, then it could be low, one could be high, one could be low because of the difference between the entity's mandate of what it's supposed to do. You were just having a discussion, side discussion on a note. If you are doing a home security or the home secretary or the home office, security is much more important, especially if you're dealing, let's say, with the prosecutors area or the prisoners. Now, information security is much more higher requirement than any other entity. So you will have to spend enough resources on information security to deliver that. So it is nothing new to you guys then. This is preliminary risk assessment. You will consider looking at, when you understand, you do the initial, what we call entity level understanding, then at high level, you will grade them. That is where your, as you were mentioning before, your scope would be decided at high level. Audit project management. So the initial stages of the project management is to build an engagement, as we've just mentioned, that basically saying, okay, entity X would be audited. You will assign a person to audit entity X. The second is to build an audit plan. Basically, okay, what time frame are we talking about? When are we going to start? When are we going to end on of the plan? Time requirement. At high level initially, but later you could also do that at individual level or at a task level, how to execute the plan or executing the plan, and then monitor the project activity. Basically, like any other, you will see whether your plan, as long as a timeline or individual task or individual person, If we're doing ITGC, mostly what we call information technology, general controls, each module, who's doing it, are they still on budget and on time? So that is basically how to do it. As we said, it's basically the same 3 stages here we talked about: project management, planning, executing, and then reporting. So this is basically showing you the same thing, but at a project management level. That was as a specific step level, but this is overall, the manager would have to decide or to do this. We'll delve into detail about, we've mentioned a few times Audit Universe or IS Audit Universe. When we talk about the IS Audit Universe, we're talking about, remember I've mentioned an inventory of the assets. The assets could be software, hardware, people, the entity. You have to understand the business processes that those units or the assets are used for. Some of the key reasons, again, is the same as what you need to do on assertions, as we've mentioned before. The accuracy and completeness of, again, goes back to the not only the objective of the audit, but the objective of the unit or the objective of the area. If we're talking about security, we're talking about confidentiality. When we talk about procurement, we're talking about accuracy and completeness of the data. So it all depends on what type of either assertion or what we are looking at the end. But the first thing about the audit universe, that's basically the first task of any audit entity, ministry. What you're looking at is to first identify the assets or the what we call the auditable units or the auditable items. Any questions so far about audit universe? Does everybody get what an audit universe is? It's the same concept internal auditors a lot of times uses within the entity. It is the same, but here you are using the same because you want to identify your targets to identify scope. So in order for me to identify scope, I need to identify where am I choosing the scope from? So I need to understand the entity's information system. So be it, you could go through the structure-wise, you could go through function-wise, but what you're trying to identify at the end of the day is what information systems are used, meaning the people that are using it, the software that are used, hardware that are used. Basically, those are the 3 that you want to identify and link into a specific either structure or a specific function. So once I link to a function, now I know what mandate they came under. Now I could assess the risk. Exactly. So when you have the assets, you put the assets into the function, and now you could start doing the risk assessments. I mean, you will understand. And sometimes the structure, the reason I say structure sometimes is you will know that mandate, okay, how many people work in this area, who's utilizing these assets. Then that also comes into being, whether it's risky or important or not. Again, all of it, we're not going to forget. It's not only, there's a 2 qualitative and quantitative, even in the mandate. One thing is, as we said, like home security, something that is very important for security. It's not about money. Sometimes it's about money. If we're talking about procurement or payroll, I want to know how much runs through this system. As I mentioned before, if it's only 2 transactions that, even if it's big, I could audit it manually rather than invest a lot of time and effort on IS audit. Because remember, as we said, IS audit, if I need the procurement system, I need to first audit IT general controls. That is fencing this application. And then within the application, I need to audit different things: input, process, output. I need to audit application security. I need to audit application change management. I need to see if this data is also backed up or not. So I need to do a lot of audit. If it's only 2 transactions, even if it's millions, I could audit manually, much more efficient, because at the end of the day, when I'm running an audit, I need to do an efficient audit, isn't it? Time and resource are important. Exactly. That's the whole reason I'm talking about. It's the resource allocation. How many people am I allocating to this job for me as an auditor to get comfort? So that is, again, the audit universe, the mandate, the resources. The IT-related areas, the universe, at least includes some of the follows. As we said, when we are looking at it, part of it is actually the IT organization itself, how big it is. You might go some certain entities, there's only about 5 people within IT, maybe a manager, a guy who does security and the network, help desk guy, and a database administrator. Sometimes you see 4 or 5. Certain organizations, you might see 200. So your work also depends on how many people you're dealing with, on top of what we've already talked about, the assets that they are actually working on and the mandates that they're working on. What are the strategy of the IT? Do they have a strategy? We've talked about at the coastal level, remember, about the tone at the top. A lot of times IT is a help or a tool to help the organization's mandate. Is it aligned? Because that is the first and foremost thing. Is it aligned? And also, is it efficient? That is the things that we need to ask ourselves. And also we need to find out if it's, we've mentioned, if it's documented. If there's no IT strategy, right there is an issue. Is IT, because only when there is an IT strategy, secondly, you could only think about, is it aligned or not, isn't it? If they don't have what to be aligned with the rest of the entity. So the first thing is to have an IT strategy. Next year, you could come in, if it's not aligned, then you could say your IT is not aligned, its strategy is not aligned with the entity's main strategy. Objectives, mission, resources. Resource we talked about, is it a small, is it medium, is it large? Because that also depends about your scope, amount of time that you will devote to IT. IT projects or programs, are they running programs or projects now? Are they enhancing? Because UAE, sometimes when we went, you could go an entity that has 5 people, but they will say, okay, this year we are, because remember, they might be utilizing outsourced group. The organization itself is small, but there might be an outsource that is dealing with that's why I say sometimes you need to know who is dealing with those assets that you are looking at. Sometimes they might be telling you, oh, we are implementing an SAP. Now they don't have anything. You know that they will have to be growing. You know the risk that is. If you're doing the ITGC, system development or change management, becomes very important. How are they going to, when the implementation is going, you could audit during whatever stages that has been passed, but also you could advise them actually, or tell them any weaknesses that they have in regard of setting up for the future. So the programs that they are running, the investment that they are making, because those are also important. As I've just mentioned, are they developing, are they aligning with the entity's mission and mandate? What type of governance is in place within the structure? Because once the structure exists, do they have a steering committee? A lot of times that is expectation, because who decides what project goes first or not? Because different department could request different new technologies and different ways of dealing. Who decides those? Is the steering committee only within IT, or the business part of the steering committee? Because that is also important, because at the end of the day, IT serves the business, isn't it? So the steering committee has to be the business. That is how they decide which project to take, IT project, which project not to take, or which project to prioritize first, which project is second and third. So you will understand the governance or the structure. Steering committees, do they have risk management or risk assessment on the IT? Because how do you put controls in place if you don't even understand what the risks that you're facing? So there's IT alone, not only, I'm not talking about enterprise risk management. IT is within that risk management. If they don't have, then as an IS auditor, you're looking at IT, you say, even though the enterprise don't have, you still supposed to have. If the enterprise have, then you are part of the enterprise, and they supposed to be feeding as being part of the enterprise risk management. Is there any internal audit that has been done? that has reviewed the areas that I am concerned with, or the part of the audit universe that I'm looking at. We've just talked about if there is a report from internal audit on one side of your universe, you could rely on that and you could move on. But what you could do is a follow-up on those issues that are identified. You might not be devoting a lot of resources starting a new audit in that area. You're only going to follow up and you will focus on other areas as the goes. So all of those is important when audit universe, when you are doing it, the whole reason is to come to your scope, basically, of what you are going to audit the year that you're trying to audit. Audit objective. So now that is where we're coming to objective, and then the scoping comes from that. Audit objective refers about the goals that needs to be accomplished in that audit. In this case, let's say, prime example is, as we were just having a discussion, let's say about home, in Secretary of the Home Office. One of the most important objectives of that would be security itself, isn't it? Whether it's information security or not. So information security becomes one of your objectives. Confidentiality of the data becomes one of your objectives. As an IS auditor, that becomes a big area. Most of the time, as we said, like in this case, confidentiality, audit objectives always, we state on the report that information is confidential and secure. In other words, sometimes you'll say that the transactions in that area, if we're talking about procurement, or let's say HR system or payroll system, that it's accurate and complete, because that becomes the objective, and that is where we are targeting. Our work has to basically answer that statement or assertion. Have to either say either we met or we didn't meet accuracy or completeness or confidentiality and security. These audit objectives include assuring compliance with legal and regulatory objectives or requirements, as well as confidentiality, integrity, reliability. On IT, we talked about those three are really very important: confidentiality, integrity, and availability of the data or information. Any questions so far? These are some examples of audit objectives: understanding the overall impact of IT on key business processes. We just mentioned payroll could be a business process. Other service delivery could be. Once you target that, then you know which type of assertion you are looking at. Even if it seems to be a financial assertion as accurate, from the system, you will know, is it calculating? Now you go down, as we said, application control level about the processing. If I enter something, in entering it, am I entering it correctly? Some of the things that input we will talk about later, but I just want to highlight now is when you're looking at application controls in regard of input, if I'm talking about, let's say, payroll, where it says salary, can I put a letter rather than number? Because the system could be programmed where I could only put number. Like if you're putting an ID number and your ID number is always, let's say, 15 digits, you could specify, you cannot put less than 15, more than 15. Those are what we call, it's not guaranteeing you that it's accurate always, but at least it limits input controls. Exactly. It's an input control that limits what you could input there. Processing, the same thing. If I put it, how is it going to process? So accuracy becomes important in that regard. So the key business processes would have to be drilled down into the assertions within IT audit or IS audit, auditor wants to accomplish. And these always audit objectives, later we will see on the report, you will actually have to put it on the report that it accomplishes that, accurate and complete. The payroll is accurate and complete. Another thing you will look at the objectives is that IT systems are adequate. We talked about if they didn't have their own standard, then you will have to decide, okay, is this adequate? Is this good enough? So you decide what good enough means if they didn't decide. How did you decide? As we said, you don't say they don't meet the basis that you're coming from is the standards that we've talked about. It's the good governance, whether it's COSO, ITIL, COVID, that is your basis, but it's not only that basis, but also their mandate. If they want to keep the water running, if they're not monitoring when there was an issue or the water was cut off, if they're not monitoring, then now you know there's an issue about monitoring. So that is where it comes. Exactly, that's what they're saying here. Payroll system or financial accounting system. Now, accuracy and completeness is important. As we talked about, just whether it's a water system or electricity system, if they're not looking at the performance of the system or the security, then you wouldn't know. So these are examples. If I'm running expense reimbursement, I need to know who am I giving, what verification do I need in order for them to pay. Again, third party and confirmations becomes important here. Examination of system development or process assurance and procedures. We've just talked about if they are implementing a whole new system development lifecycle or system development controls or methodologies becomes involved for the IT auditor or IS auditor to evaluate and to look at and to give recommendation based on whether they are adequate or not. Any questions, examples? Any of your entities that are implementing either new systems or how you could utilize or how you need to set up an audit objective on your entities? If you have any questions, examples.
There are IT systems, but standards and controls are not at that level where we can say that they have adopted ISO or COVID or that. But we are auditing them, and mostly our objectives are to evaluate how their rules and regulations are applied in IT, how their business processes are translated in IT. These are the two basic aspects we do.
Is there any entity that whether it's either aligned or meaning incorporated within the telecom or standalone? Is there an entity that's responsible for information systems in the government?
We have
Cybersecurity Act. So now you have a starting point, isn't it? Cybersecurity Act, once you have, then even if it's not ISO, now you could use the Cybersecurity Act as your guidance or standard for information security. Because what they call nowadays, they call either scrub or the basic, basically. It's like we all went through COVID, isn't it? You have to wash your hands, isn't it? Basic things that you have to do. The basic things on cybersecurity is the information security things like password length, who have access to, and is there any segregation of duties? You will see later. Basic things that you need to do before you even go to scripts and like man in the middle and attacks and stuff like that. Are you doing the basic things right? Is very important. A lot of times, and you will see, it's not whatever complicated you have on the scripts and stuff like that, it's the basic things. Somebody either forgot to do it or you didn't change the, how would I say, the admin default passwords for a big system. Exactly. So it's the basic things.
People are now managing the information, managing the data, because the auditors don't know much about it. And we are not sensitized about protecting the password.
It is very important. Actually, I was part of a fraud that did happen on somebody. Basic, yeah, basic. It was a basic thing about, let's say, was a transportation entity. deals with batteries, tires and stuff like that. The guy who's supposed to have give it to somebody who he didn't want it to come to work every time, says, use my password, approve it, call me. How did we know about it? Because you could see who logged in what from what machine. So if this machine has been logged in from, because you have a central system that you're logging in, isn't it?
Here. Not
Exactly.
that postal service.
So that's an issue also, that passwords should not be shared, passwords should not be used. So that's all of those things are in information systems is very basic, but in reality, it does happen.
People that were not in, right? Qualified as it is not friendly, it is not.
It always happens.
Serving the purpose.
It
So
always
whenever
happens.
we have shifted forward to systems without gaining any advantage.
It always happens whenever people don't like change. And IT always brings some change, isn't it? When you're doing 20 years, 30 years in one way, and somebody tells you, no, this is not the right way. Because IT also brings some changes of how you used to do things. Even what you are seeing, what you get used to it, where to sign, you already know. But once it comes in, it again, whenever IT is bringing in, as he mentioned, it also brings what we call business reengineering. The whole process of you do business changes. Now it's an approval, electronic approval, rather than signing. The signing only might come like an official contract or official voucher or something like that. All the other things that in the middle that used to be signed, now it's just a click. Somebody needs to approve. You don't need to sign, like even payroll, you don't need to. People still do it, and I have seen sometimes, even though it's automated, but they still, the manager or whoever the boss is will say, no, 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 I need print out of everybody, the totals, that's only where I would sign. The question is, as we've mentioned, if I'm reperforming, if I'm doing, I have the system, I could easily compare, or I could do my own as a third, almost becomes now a three-way match about what he signed, what the system has, what I calculate. Those would happen, and it's time. It will actually, and it only takes a time where it's not you even, it doesn't have to be an audit. You'll say, okay, you're not adding any value by doing this. Printing and recalculating is the same thing. And once they do 3 months, 6 months, I don't think 1 year you need to do the same thing when there's no added value and with numbers are not changing every time it's the same. So people will get used to it. It's the initial change, but it is important that any entity that deals with it directly, whoever either dealt with the cybersecurity, for audit to engage them and talked about them about the different standards. They don't have to take it as it is, but they could take some basic minimum, or what we call a baseline requirements, which everybody has, especially now, as you've mentioned, it's much more important if Pakistan is going, all the public entity are implementing something, there has to be a basic understanding or baseline on IS. Exactly. So those are what I'm calling basic baseline, not only on security, but IT operations. You don't have to take ITIL, but have a baseline. Like let's say help desk, log in your issues. It has to be required. A lot of times when I tell people is like, you don't have to have a system to log in, because I'm not requiring you to buy a system because that's a cost. You'd have to decide on your own. I don't care if it's a spreadsheet or I don't care if it's a note, but you need to log in the requests that are coming, not only phone. Because now it's a management also decision, isn't it? About resource, about how many issues is the person dealing with, manpower, hours of the issues that he's dealing with, how many people. Also for future, isn't it? We talked about IT steering. If one application, let's say, as part of the audit universe, we identified this entity has 6 systems for simplicity. There was one system that 80% of the issues are coming from. then I know either I need to change or I need to enhance or something, isn't it? So these information circulates back as management decision of what to do with your budget or resource within IT or IS. So IS audit is part of that, helping them being efficient and effective. Yeah, so that's why I said baseline security change, sometimes disaster recovery. How would, God forbid, sometimes they say knock on wood, if there is a flooding or God forbid, these in this area things happen, there is a bomb in this building, could the audit accountancy office carry its mission? That's what we call business continuity. Exactly, contingency planning. A lot of times when this entity is using systems, then you need to have either redundancy or you need to have a data backed up and a plan of people, forms, anything you needed to carry on another location. Again, that's where I was saying not only security, business continuity, operations, and other aspects of the information systems have to have a baseline requirement on all the government entities so they could continue to function in a more effective and equitable manner. So another area that we talked about, once you understand the audit universe, is to understand the entity and its environment and the processes. This is where we've said a general understanding of the business practices, functions relating to the audit subject, as well as the information systems supporting these activities. This is exactly where we said you layer the assets or the universe or the inventory that you took with the mandate and the actual processes of what we talked about. You could have the same, let's say three things, we are saying hardware, software, and people, but the mandate of the entity or the practices of the entity changes the environment of that IT. So that is where it's important. Analyzing the organization's assets, network, infrastructure, applications, data, order to identify potential vulnerabilities. Exactly, that's what I was saying. One entity, something might not be risk. The other entity, it could be risk because of the practices and the mandates that it has. Internal questionnaire is something that you've just mentioned. I will show you at the end. That could help you accomplish this, what we call either control environment assessment or what we call internal control questionnaire or assessment. Could help you identify those initial IT environment and processes for you to understand. When we talk about controls, there are controls that are specific to an application, but there are controls, as I said, remember, about entity level controls, those are what we call it's pervasive. So if we say if it's something is at network level, it means each application would have to follow that rule, or it's the same thing about the like code of conduct is a pervasive, isn't it? Everybody has to do it. It doesn't matter if you're an employee. IT is the same thing. There are certain controls that are at the entity level that are pervasive, and there are controls that are specific to individual or sector or unit. The ones that mostly you look at, and the important is for IS auditor always, is the controls that we are looking as you scope things. Remember, we've said about the objectives is to link back about the overall, the process that we are assuring. What is our objective? We say if it's a payroll, then we need to understand accuracy and completeness, security. So we need to link. So the controls that we are looking at has to be linked about the financial statement level. So we need to understand that linkage. It's very important because our work has to be supporting at the end of the day with the mandate or the financial statement that we are auditing. It could have, exactly. Exactly. One is the financial, another, remember, the government is not only about finance, it's about also service delivery. or their mandate. So we need to link either to the mandate or the financial statement. Because when we are looking at the scope and the objective, and as we said, we state the objectives that it's accurate and complete and secure. So we need to link to the financial statement and the mandate. Once we do that, so the first two stages that we've done, we've identified the audit universe. Universe is nothing other than identifying the assets, be it people, software, hardware. Secondly is to layer that about the entity and what it does. It could be the number of the people, it could be the mandate that it has, it could be about where geographically that entity operates. So that is the second layer, which is the entity and its environment. The third thing that now once we have these two, now we could come about the risk. Now we could say, okay, which area is the risk, which area is not, because now we know in general about the practices or the processes that the entity or the mandate of the entity. And now is where, as you said, we could engage the risk assessment methodology that Pakistan Audit Office already has. You say high, medium, low. Once you do that, that now gives you your scope. So there are two levels of risk assessment required. One is at this stage, at the planning stage, which is risk assessment done to develop IS audit plan, come up with your scope. So that will help you with the resource that you need, the timing and everything. The second one is at the engagement level. So once you decide and you go, then at each unit, now if I'm looking payroll, if I'm looking at finance, if I'm looking at the service delivery, then that itself also has its own what we call risk and control matrix or risk assessment done at the engagement or even at the section level would have its own risk assessment. Because once you do the walkthroughs of that section or the area, then you need to map what are the risks, what are the controls that identify those risks. That is what mostly sometimes it's called also gap analysis, because I identify the risk independently and I do the walkthroughs. If I see there is no control on those risks I identified, right there I have a finding. I will confirm with management, but right there I will have a finding. Sometimes I will look at issues from that. Actually, does it materialize the risk? If it materializes, now it's even more because I see that risk actually happening. If it doesn't materialize, or if you cannot see anything material, you could still consider it as a finding and you say, these needs to be mitigated or controls need to be put in place. So these are the different types of risk. Mostly we're just talking about the risk jargon here. Inherent risk is the risk that exists before we even consider controls that are in place, meaning this is just general risk area. As we were just saying, if we're talking about prisoners, homeland security, courts, it's inherently risky area for security, whether it's information security, physical security. So it's inherent before I even think about and what controls to be put. So it's inherently risk. So those are majority what I use inherent risk when I'm initially looking at that high level scoping. Inherent risk. Cash. It's inherently risk to disappear. If I leave cash around, it's inherently risk somebody might take it, it might walk. So it's inherent risk before any safe cashier who's supposed to be responsible. Before I put any controls in place, those are inherently risk. Control risk is it's an error where, in other words, the entity puts a control in place. Let's say cash. I put a door of where I put the cash, but the window is open. So it means I put a control in, but that control is not working. So that is where you call a control risk, meaning whatever you've done it, the risk is still haven't changed, or the risk is still there. So that's what we call a control risk. Basically, the control is supposed to prevent or detect something bad happening. If it doesn't do, it means there is a control risk. The third is a detection risk. That is where the auditor basically would not detect that this risk is happening, or this is an issue could be happening. Procedure performed by the auditor to reduce the audit risk to an acceptably low level will not detect a material misstatement. So this is what you call also sometimes an audit risk, that you will not be able to detect an issue here. Any questions? The control risk? Yeah, the control risk basically, it's saying that if I put a control in place, the example that I take on the cash, it is still not going to resolve the issue that the cash will be disappearing. Exactly, to mitigate the risk. So the control, it's not preventing, detecting, or correcting the risk. Because when you put a control in place, mostly the control does either these three things, either will prevent or it will detect. Detect basically means it gives me an alarm so I could do an action. Or correct, it means a lot of times you might have a control that's redundant. The reason you put a redundant control, it means exactly, that's all it means. Control risk means it's not a solution. Yeah, you really need, so sometimes you might need to have additional control to correct the one that is deficient. You might still need the keys on the door, but you say, maybe I need a window also that closes. So it's not that you will get rid of the first one, you will enhance it by adding a corrective control. Or
kind of this IS order or system that how we can identify that this system has this system has system, everything is working with IT based. So we manage how we calculate this IT based.
and anybody who could respond? Is it?
Can we separate that IT system, that into the directory, that into the
So that is a control risk. Inherent risk here is that everything is, you said, is run through the system, isn't it? Two things I could tell you that is inherently. One is security. Who has access to it? Could anybody run a payroll on the system? So that's inherent risk. So I need to know that there is access is granted based on job description. So that's important. So right away, that's an inherent risk. Whether they do it or not, I know it's an inherent risk. Inherent risk. So these ideas could be translated into information systems audit. Because once you get the mandate or the function, then I will know which area is automatically a risk. That is basically what we call an inherent risk. Something before you consider whether the system has a control or not, is it risk? Data changing automatically is a risk, isn't it? Who could change is another thing. Whether they did it or not is another thing. But right away, if it's a system, if that data could be manipulated, I have a problem. From financial standpoint, if somebody just gives me a financial statement, yes, this is a control risk. Excess payment is a control risk. Exactly. Or another thing, can I add somebody who's not a constable? That's an inherent risk. Can I add somebody, a ghost? That's what you call a ghost employee. Can I add somebody? That's just inherent. About security, but that's security. Who could input something? Who could add somebody?
password at the
Yes,
are not by the person who are allowed to.
some,
See, that see that the person who use the password are allowing their password are capable of doing that job.
that's another thing.
Definitely, find that job, someone who is capable of doing that.
That raises another issue. That raises an issue of competency. That raises the issue of training. Because a lot of times when there is a new system, as you were saying, as Pakistan is going through an updating IS system, whenever system is introduced, I used to audit system implementations. One of the things at the end that we'll look at is 2 or 3 things. One, is there any documented user manual? That is for posterity. Technical manual, because now a lot of times it's an outside company that implements, but when you have to maintain, it's your team that will maintain. As the team that maintains have a technical reference book or the manual that refers what type of errors, how to solve it, everything. Before, sometimes even if it's the first year, the implementer still helps you, but that's what they call first level help or second level or escalation. First, your team has to look at it within that manual. If they find it solution, they will solve. If not, then they will raise a ticket to the secondary level. So user manual, both user and technical manual. The third thing that we always ask is training. Has it been done? Has the people who are using the system being trained? Whether the training is adequate is another thing, but if the training hasn't been done, then you already know the problem that you're saying will come regardless. You could be a PhD, but if you've never used SAP, you really need to be trained in SAP. But the forms, especially in your area, if I'm doing procurement, I need to know how to raise a PO. I need to know how to do the acquisition. I need to know how the contract have to be awarded and all of those within the system. I need to understand all the steps within that system. So training is very important. If a new system is coming, as an IS auditor, you will say, where is the training plan? Is everybody getting training? Where is the training schedule? Attendance of the training, I need to check that people actually get trained. That's basically some of the processes of the system development life cycle.
Their system manager is managing things. It is an inherent risk that no control, inherently, no control can control it.
No, if you mean what we call segregation of duties, that's inherent risk. Meaning one person is doing everything, input, processing, output, approval. I'm inputting, I'm the one who's approving, then that is inherent risk. It is a control, but that is inherently risk, isn't it? Why that control came? Yes, yes, yes. But the reason I'm using segregation of duty is one person doing multiple functions. That is inherently risk. That is what you're talking. One person IT. Remember what I was saying, when you have 4 people IT, one person might be the one who runs the whole thing. So that is inherent risk within IT, especially IT nowadays, especially when it's new or IT is used, even in US, IT when it's starting, it's used as basically a help, isn't it? A database guy come on network, he does everything. We rely on so-and-so, he does everything. Right there, that's inherent risk on relying one person to do a lot of things. It doesn't matter whether that person is a low level or a manager, because the function he's doing it, basically, he is the key person. That's an inherent risk. Again, it goes back to security risk. One of the things is,
What is control risk?
control risk basically is, I said that person has, let's say, a password, and now I have a log of what he did. But the thing is, that is not stopping him doing multiple jobs, isn't it? I could see, but that basically control risk is when that control does not mitigate the risk I already identified. That's a control risk. Yeah. Inherent is before we talked about the control. Control is I put a control in place, but it's not mitigating the risk, or it's not enough to mitigate the risk. It could be. Detection is basically, this is an audit risk detection, that auditors do the audit, but they don't detect the risk. Yeah, yeah, risk of material misstatement. Yes. Two ways. One thing I already said, which is the CIA. Remember, confidentiality, integrity, and the availability. So one is security, confidentiality. Integrity is if the data could be manipulated, because now I cannot even rely on the system. Again, change management. We talked about code baselining, a lot of stuff. If it changes and that change nobody could know and attribute, now I cannot rely on the whole system. Like you said, payroll, isn't it? If I could add somebody on the payroll and nobody detects it, I could change and access, add more money to somebody who's not constable and nobody detects this. How can I rely on that payroll? Now, that's not a money issue, isn't it? It's about the integrity of the data itself. It's about the security of the data. I cannot rely that whole system. Now I have to calculate everything manually. Whatever the system gives me is garbage. Because if that's the, I wouldn't say the beauty, that's the difference between the system and the manual. The system, the control system, if I had to test, I only need to test once. As you said, can somebody add it? Or is there any detection? Or the password, as we said, the length, especially if you have the configuration. Because once you have the configuration, everything will have to conform to that configuration. Access is slightly different. Adding, if you are calculating, processing, let's say, if I made, sometimes it might not be to the penny, but it could be range, isn't it? Corporal takes or constable takes between these ranges. If the system is not designed as a range, and I could see the system, they could get more than that. You talked about the access, isn't it? If you could get more than that, then I cannot rely on the system. It has to be within this parameter or within the range. So if the system doesn't have these controls, range of a salary that a person take, or if it's even specific, then it's even better. But a lot of times the salaries are not specific, it is range. So at least within that range, I'm comfortable. If it's anything that's outside, that it means that there is a, again, control risk. It's not inherent. They put a control in place, but it's not working. Again, if somebody could change without nobody noticing, or even the coding of the things or the calculations, that range, let's say, certain month exists range. Afterwards, it hasn't, but nobody could account why. It means somebody have changed the coding, isn't it? Or the parameters. So it means that integrity of the data is not reliable. I cannot rely the integrity of that data. Is it 12 o'clock? Is it our 4 more minutes? Any questions?
One password is being used by many, like 2-3 people at the same time. What kind of risk is it?
If somebody is using the password,
Safe, at different,
it's a control risk. It's not inherent because it depends on how you set it up, the login. There are applications there where I could only log in from my system, isn't it? And there are others that I could log in on multiple. So it depends on, what's that? It can be, but if it's not, that's what he's saying, that the people are using, but if it's not being able to, yeah, that's what I said, it's a control risk.
how can we identify while conducting ISO?
There's a different things. Here we're just defining the type of risks. What you're talking about is an actual, what do you call, findings and actual issues, how identified. So those are slightly different things. Here we're only defining about what are the types of risks that we face. The one that you're saying, it depends. Again, it all depends on the mandate. It depends on the issue at hand. As I said, on certain applications, like let's say procurement, if somebody's doing procurement, there is no reason for him to access multiple places, isn't it? We know that that person comes to office, sits in the office on his laptop, and that's it. He shouldn't be accessing from other places.
One person, password, 3 passwords.
No, one password, multiple people.
Like 3 person.
But those, so that's what I'm saying. Are the 3 persons coming into the same office, same machine? Then that could happen. You might not be able to duck, but there are different controls. That's why I say one control might not be enough. So that is why you have to put redundant controls. So one is, it has to be, I remember at one time at the central bank, the system of funds transfer were only done on password. They couldn't tell whether the password might be used or not. But what they said is that you could only log in on FTS, what they call funds transfer system, from the computer we know where it's sitting, because they directly linked only to be used on that IP address. So whether the multiple people could be using, but they say, but only one machine, whoever access have that office, that machine would only be able to use it.
But that machine was
Designated, yes, because it's a big risk funds transfer. So machine was designated to only do that. I recommended, I still call it as a weakness. I said, do you even look if people are leaving, any changes? Because I said people might be using, because you never verified who is using this. So what we call a periodic review of access has to be done. Logs is another thing, but periodic basically means today my function is a AVB, or I'm responsible for funds transfer. I could be the same AVB, but I'll be moved, let's say, for customer service. Now I don't need access to have that funds transfer system, isn't it? Sometimes what could be done is you could link the person's ID with the generic password. So if that person changes, now I need to change the password also because of that link. So there are multiple, as I said, controls that could be put in place to mitigate that risk. So one is I could dedicate where that person is, depending, again, remember I said, depending on the practice or the business. The auditors, we used to log in from everywhere. We might not be logging on only on one machine. Sometimes we have a desktop sometimes we have a laptop that we carry. Multiple locations could happen. If there is somebody who's central, let's say you're running a payroll or you are a procurement, it's a central function. Unless there are multiple people, but at least for that one password, that person you expect to be from that IP address. It could be also a laptop or desktop, but I might have both IP addresses. So I link his passwords to these IP addresses. So nobody else different. So location, I could link it. I could link to a machine because of the machine addresses. So there are multiple ways of doing it, but you just need to understand the risks, as you said. Secondly, you need to understand the function, what is possible, what is not. Then you put a control in place once you have those two in order to mitigate. Who is KBO? Educate me, because I don't know. Okay. Data entry. Okay.
And then next year, as the password, if you have the password of the next year as well, then it means the roll up the upper year. So that's that and then the next year, like the administration officer, so 3 operations are being performed by the KP. So they will more than, but when all 3 years or 3 processes are being performed by the same person, it will become an inherited item.
Absolutely. That's what we said. Segregation of duty is an inherent risk, even though the name segregation of duty is coming from the control. But I don't know what better way to say the acts or the opposite of that is what you're talking about. So what we call segregation of duty, it becomes control. If it's not, then it's an inherent risk. That is where your example comes in. It's always inherent risk. So those are the things that I always need to look for. Inherent risk.
And much control environment of logging. They use the compression while every time logging and every time processing a transaction.
Yes.
Each transaction is linked with compression of
The person.
violation.
There are another thing. I mean, I have seen a lot of systems that you're talking about. No, it exists, but there is always, you always have to think about exactly as you said about the risk. Segregation of a duty is a risk, isn't it? When you are creating the application, even sometimes it happens on procurement, we say, because one person requests, because if the department is not big or the entity is not big, the requester, the approver, the committee, the person might have dual roles. So in general, that does exist. But what you don't want to is this, because my latest job, I was talking to somebody on procurement, the same things, like it's a small team. I said, it's fine. You could be a committee and you could be, but it doesn't have to be in the same transaction. So the system could be built in a way, especially when there is a workflow that somebody has to approve, could be built in a way that if I'm entering, I cannot be basically 2 steps on that same transaction. Same ID cannot be. So where then it becomes is somebody have to give me their password, an ID. So I have to first log on under my ID and put it in. Now I have to log off, log in and somebody else's password, and then approve. Again, you could put another control. Remember, we just said, if I'm doing it, I should not be doing on my same machine. So now I have to go to so-and-so's office in order to log on under his machine. So now, if you have a physical cameras also, there is a third control, isn't it? This person, what time, let's say I am investigating. Now I know what day that it happened. If I have cameras, I could see what day that he or she went into that office. So it could be detected. But now you have to put multiple controls in place, isn't it? The first is the password. The second is the password linked to a machine. The third would be the physical camera. So only when you have all of this, then you could have a way to detect the issue. But maybe somebody have to tip you initially. How would you know, aside from the inherent risk? Yes.
Because this is preliminary risk assessment being carried out by the audit, right?
Yes.
And this audit risk is a combination of these 2 risks.
No, this is just an explanation of what type of risk that could exist. Inherent?
Audit risk is combination of direct risk, indirect risk, and tech.
Yes.
So the audit risk may include inherent or control and protection.
Yes, but on the planning, what is important for me is the inherent risk. Control is when I'm actually doing the work, isn't it? And the last one is actually the auditor not catching it.
The definition of inherent risk is that there are no related.
No. The inherent risk is basically you are forgetting the internal controls. Basically here it's basically saying you forget about inherent and internal controls. Is it risky or not? Like we said, cash, security, automatically it's a risk, isn't it? You're not considering the controls in place with no related to internal controls. You are assuming, assumption. So you're assuming that there's no internal controls. Is it risky or not, this process? Cash, is it risk? Would be yes. Something else might not be risk. It's the same way you will look at the specific activity. Like he said, segregation of duty, that access to data is the risk. It's not the, exactly, it's the access Who is accessing? Remember, I told you it's inherent risk. Who is accessing? Is access being given per job responsibility, or is it being given everybody? Like all of us came in to work here. All of us has the same access. Right there is an inherent risk. Exactly. So access, again, I will say it multiple times, and that is always a problem. I have seen multiple places. Access have to be commensurate to job responsibility. If you go somewhere and they say, I have seen multiple times people telling me, we just duplicate what so-and-so had.
Where risk is involved, it cannot be controlled.
It could be controlled.
It can-
Yes. Again,
Can be controlled.
no, cash is, all of them are the same thing. Inherent risk, it just means before you consider control, is this issue a risk or not? Is this activity a risk or not? That's inherent risk. Whether you could control it or not, somebody could say, cash, yes, I have a safe, I will put it and only me who will get access. That's a control. So inherent is before any control. Yeah. Before you consider control, is this activity a risk or not? That becomes inherent. So in information security, information systems, we talked about security is inherent risk, integrity is inherent risk, availability of data is inherent risk. That's what we say the assertions. If this activity falls into those three, right away you know it's an inherent risk. If it's something could be changed, if the data could, or the transaction, because the transaction is the data at the end on the information systems. If that could be changed without any trace, or let's forget without, if it could be changed, then it's a risk. Then now I'm concerned about who changes, how to detect the changes, how to correct the changes. So that now I'm in the realm of internal controls. So inherent risk is before you consider internal controls. Is it clear now? Is it clear to you now?
Specific example about.
Okay. Do you want information systems or any examples for you to understand? Yes,
I just started the process of risk assessment.
exactly.
First I have assess the internal.
Let's-
risk.
Yes, let's go into your audit. So it makes it much more relevant to you. Which entity are you auditing? One of the entities, or even prior years, one that you audited. Road construction, okay. Okay, road construction, so inventory is important, isn't it? So what system, do they use system for their inventory? Purchase is important, isn't it? They have subcontractors, isn't it? Okay, how do they manage? Is there any systems involved on all of those? So for IS audit in this case, it might not be relevant if all of those are.
This metrical system. And they are automated.
Okay,
There is the collection aspect.
okay. Fair collection. So is a tap in?
Yes.
Okay.
There's this card and this white card.
So now you have multiple issues with those. So first of all, you have a card inventory. Is it prepaid? Most likely it is a prepaid. So accounting, let's put it aside. So now you have a card inventory. How the card is activated, amount that could be put in the card, who has access to that amount, who could put it, and what are the controls. So those are all, what I mentioned now is all inherent risk right away, isn't it? I didn't even know what controls are in place. I just thought about what risk could happen. How many cards are there? Is it 1,000, 10,000? Do I know, do I have an inventory of that? Whenever one is activated, I see it in the system. So that's inherent risk. What controls we will talk about later. So the number of cards is important. The amount cards could be put is important. Is it 1 million? What currency do you guys use? What currency did you guys use? What is the name? Oh, I thought India was rupees. So it's the same thing. Yeah, I know Indian rupee. I didn't want to say Indian rupees while I'm in Pakistan. So I had to say, but I didn't want to say rupees at all. So I need to know first if it's a difference. So if it's a rupees, can a card be put 1 million rupees, or is the card limit could be only, let's say, 5,000 rupees? So that is, range is important. Yani, what is the top amount of the card? Because remember, what I'm worried about is whatever cash that I have now, this person could use it. If somebody tops up illegally, then now I have 1 million. So my problem is it 1 million or 5,000? That's a big problem, isn't it? It's a big difference. So amount by itself of the card is an inherent risk. What amount it has. Does it allow? That's another thing. That's what I'm saying. The control is different. So let's put the control aside. The amount that it could have is a problem for me, isn't it? You just mentioned it's a problem for me. That's inherent risk. Whenever something you could think it's a problem for you, it's an inherent risk. Because I don't know what the controls that they put. I walked in, all I know is I read, let's say, their mandate, or I know their work, buses. My problem is also the bus breaking down in the middle of the road. It's a problem. I don't know what maintenance or quality control they have, but as a normal person, the bus breaking down in the middle of the road is a problem. The inventory of what goes in the bus also is a problem for me, isn't it? It could get lost. It's just like cash, tires, batteries, everything. It has a value outside. Those are inherent risk. So whether it's, how are they, if that is also automated, their inventory, now I have an information systems inherent risk. So anything you could think of as a problem, it doesn't matter whether it's outside or they're using system, before I know what they do, meaning how they do before I know internal controls, if I could sit and say, okay, is that a problem? If I say yes, it's an inherent risk. But once I go in, that inherent risk I already have, isn't it? One inherent risk. I follow that. Let's say that's my inventory. I follow that. And then I see that they put a control in. But that control is not, I'm not satisfied.
That's sufficient to.
It's not sufficient. Then that is a control risk. Let's say I did the audit, but I still didn't discover there's a big fraud.
In the case of this data collection, this can be an inherent risk if somebody can efficiently top up a card.
Right away, it's inherent risk. What they do about it, let's say there is a control. But they put, let's only say one person could do it. Now my risk is reduced. But that doesn't mean that one person could still top up, isn't it? That's a control risk. It means that there is a control, but that control does not detect or prevent my inherent risk. So it does not detect. Yes. So it does not prevent or detect my inherent risk. So initially what I had is an inherent risk. Control risk basically means they put a control in place, but still my inherent risk exists. So now it becomes a control risk. Let's say I did the audit. This control risk now becomes a detection risk because I didn't even detect that it's not enough. But now see how it's linked. So I have a risk initially that I know even before I walked into the place, there is a problem. They didn't mitigate the problem. Oops. Then it's a touch screen, shouldn't be touching it. Can use it here. Yeah, that's right. Yeah. So now I started with a problem. The problem is not solved by them. Right. Then that's a control risk. That's another way of thinking. You have a problem. The problem is not resolved by the client. That now becomes a control risk. If I did not detect that, that becomes a detection risk or audit risk. So that's another way of thinking about it. You identified a problem. Exactly. You identified a problem. They didn't solve the problem. If they didn't solve the problem, then it becomes a control risk. If that problem, you don't see it as an auditor, now it becomes an audit risk or what they call detection risk. That's another way of wording it. Yeah. Okay. I think it's time for lunch and prayer. Is that around 12 you take or 1 o'clock? Which one? When do you want to take? Mostly it's 1 hour and a half. That's what I've been told. So you want to take it now or 1 o'clock? No. Okay. I oblige. Where we left off, preliminary risk assessment and materiality. So we just explained what the different types of risk is: inherent risk, control risk, and detection risk. We've said inherent risk is when you don't account into the internal controls and you've only valuing whether the activity is risky or not. So that's inherent risk. Control risk, we said it is when controls that have put in place does not mitigate the risks. So that control risk still do exist. And we've said detection risk, or alternatively, you could say audit risk, is when the auditor does not discover the issue or the weaknesses on those risks. So in order to finalize the IS audit planning, an audit program, I mean, the outcome of that planning would be to put together the work program, which is stages and steps on the different areas that you basically what you said. Once you decide the scope, each sector or section of the scope, you'll have to put together, and you've identified at high level what are the risks, then you will put together an audit program to cover those risks. Then again, that's where we said you will do the detailed risk analysis, the detailed walkthroughs of each section or each area. So the formal documentation of the audit procedures in a sequential steps. So if you're doing different areas, let's say if it's corporate, then you're doing IT, HR, finance, each section would have its own audit procedures step by step. You'll create procedures that are repeatable, easy, because you wanted the following years, since the team might not be the same, something that they could easily understand and follow. If a third party comes in to take a look at your work papers, they want it. So what mostly the auditors always use is what they call the prudent measurement or task. So if somebody who's not you comes, could they understand the process, the planning, the work plan, and your conclusion? Would they come up with the same conclusions in the report as you came up with? So that is where the prudent comes in. Documentation of the type of testing that will be used. Is it going to be a compliance testing? Yes or no? Do they meet the criteria or no? Or would they be a substantial, which is basically trying to put together a scenario and saying, okay, analysis, calculations, or reperformance, where you will have to reperform and come with the same answer. All of that, you will still have to meet the accepted audit standards, ISA of your documentation. I mean, we've talked about the evidence and how evidence is kept. Documentation is very, very important. We've talked about when gathering the evidence, if you're doing interview observation, you will have to keep records of those. So documentation is utmost important in audit, not only on your evidence gathering, but also on your testing. And then when you do that testing, you will do the conclusions. Again, as I said, somebody who's looking at that same steps of testing have to be able to reach the same conclusions as you reach. So that's why it's important for auditors to document and to meet the accepted audit standards. The audit procedures mostly are by obtaining records, understanding the audit area, the subject, creating a risk assessment. We've talked about initially understand the entity in general, whatever you understood of the areas, department, the functions, do a quick risk assessment in order to plan the rest of your audits, people, steps that you need to the areas, the standards that you want to keep. And then performing a detailed audit planning, which will include your the timelines, the people involved and everything. Doing preliminary review of the audit areas. So that is once all the sections we've just mentioned, each area, then you will have to do it on its own, verifying, evaluating appropriateness of controls designed to meet the control objectives. That's on each, conducting compliance testing, conducting substantive testing, and then once you do those testing, you will have to conclude whether they meet the criteria or your expectations or not. So that is the conclusions that you read. If they don't meet it, then a finding have to be written and documented. And once that is finished, mostly the next year, if you are coming, any issues that were weakness last year needs to be followed up. I mean, always there is some standards depending on localities, but generally, whether it's internal audit, external audit, and especially on size, when we follow up those sometimes things that are not corrected next year would be rated higher, mostly, but internal controls, some governments do have that and has to be reported back, because if they didn't fix the problems you've mentioned last year, then the risk is still there. Not only the risk, it shows also the management is not responsive to the issues. Exactly. So that's the whole reason. The governance, that's why I said it will be ranked higher, because now, unless they have a good reason, whether it's cost or issues, or they could explain, it will be higher, but at least there is an explanation from their end. But if they didn't even explain and there's no reason for it, they basically disregard it, then that shows you it's a breakdown of governance in that area or in that entity. Any questions, any examples, anybody who wants to share their experience, anything? Yeah. Oh, that's when you're writing the finding. That's how you write the finding. Yeah. Once you're writing, which is the conclusions, your findings has to be based on that. Yeah. Okay. So there is a ISACA guideline on IS audit. You develop and run the IS audit program. So initially you determine the audit area or the subject that you're auditing. We've talked about that when you're doing the audit universe, that is just gathering. After that gathering, then you need to, and you do a quick walkthrough, then you need to decide which area am I going to look at it, or which one is important for me or for the entity. Those are how you choose the area that you want to look at. And then you define your audit objective. So we've said, once we decide, let's say payroll is our importance, then now we know what the objective is. Accuracy, completeness, security becomes important. So that's how they are linked. Initially identify the area, then identify the objectives of the audit for that area, and then you set the scope within that. So if I'm running the payroll, am I running current payroll? Am I running even the mostly time and nature of the audit? That's what the scope determines, the timing and the nature of your audit and the area. Yes. What is that? Oh, absolutely, always. Management, if it's internal or external, if you're doing an assurance job, it is audit to decide what the scope is. Nobody should be telling you. But that's not, that is, you could say it's still an assurance, but it's a different type of assurance, because that is a directed. It could be a compliance, it could be a performance. If they select it, say we need that. Forensic audit, so those are different. Those are not regular audits. I was talking about regular audits. Those are Even management sometimes could request forensic audit, because if they are not sure what has happened, they could call audit, internal or external, and say, please help us. Exactly. And tell us what has happened. Exactly. They might not know, but they need to request our expertise or audit expertise, IS included. So they might call you and say, please. Then they determine the scope, but if you could follow the evidence. And another thing in audit, both IS or regular audit, whenever you come across any issue, there is no way to turn a blind eye. As an auditor, if you come across an issue, you need to, that's why you need to document, report, and conclude. So once, that's what I told people, I said, if you tell me something, even at the interview level, I cannot say I didn't hear it. I need to document it. If it's an issue, then I need to evaluate the issue. I need to write, I need to dispose. That's what we call, you need to dispose it. Either by management letter comment, it has to go. Even sometimes if it's not a big issue, I will tell them verbally, but my documentation has to show that I have communicated with management to do.
Finally, it is very material. Let's say relates to fraud or something like that.
Yes.
But it doesn't come to your scope. Then how you are going to cover that?
You will still have, that's why I said, in audit, whenever you come across something, you cannot say, I didn't see it, or this is not my scope. You will deal with it. If it's out of your scope, if like, let's say fraud, if you discover, then your scope might change based on yours. Or if it's something is small, then you will write it, report it to management right away, to your management and to the management of the entity that you found this, and you will write it down as a separate and report, or as a separate always. That's why I said disposal. If I found something, I need to document, and I need to make sure that I've handed over one way or the other, definitely to audit management and to the client management. They need to know that. If it's something serious, it has to be right, timely. It cannot wait until the audit ends. If it's something that is important, then right away they need to know, and then you will need to do your documentation as you are talking to them. Perform pre-audit, that's the risk assessment that we talked about, and we've talked about the methodology for risk assessment. Determine the audit procedures and steps for data gathering. So basically, what type of evidence, how would I get the evidence, inquiry, performance, observations, different ones. So again, this is basically a recap of what we have started in the morning and what we have learned on the planning section. There is nothing new, but maybe the smaller details here and there. Let's say when I'm planning the audit ones, because we've spent a lot of time of universe risk assessment, we didn't talk about, let's say, timing or the resources, because that comes into the other side. One is I know the area that I'm auditing, what type of people that I need, how long it might take. And that once you get the people, now you assign the people into specific sections, and then that sections, you could also put timing on that section. So, and from there on, you will be able to monitor whether the person have, or the audit in general is meeting the time frame that you designed for. So mostly this is the planning, like if you're the managers, you guys are mostly managers, or you're running the audits, this is how you manage. You assign people to different sections within the scope. You give them a time, then you will evaluate even their work, how they've obtained. A lot of times you review, you send them back. If it's only inquiry, you'll say, okay, now observe. Because especially if they're junior, you will tell them, now corroborate this evidence, observe, get documentation. Yes, according to the IS audit, what thematic? Yes, according to IS audit, a lot of times, especially nowadays, what happens is what we call an integrated audit, isn't it? If you're auditing a specific ministry or a specific agency, just as we've already talked about the different people, they have systems that they are running. Financial auditors alone cannot do it because they have to rely internal controls. We've initially started saying the reason that IS audit is needed is because of ISA 315 and SSI 1315 is the reason that it's needed. That requires for auditors to understand the entity and its environment, the risk that the entity is facing, and also the state of the internal controls of the entity. Having said that, what comes environment means the systems that are in use, information systems, and the internal controls and the risks of those information systems. So in order for an audit to happen, then that has to be evaluated. So that is where the IS thematic audit comes in. From that angle, then we talked about the planning. We said, okay, in order for you to plan, then you will understand what is this entity? What does it do? What is the mandate of the entity? That is one thing, you will keep it. You will understand, because you don't say, I'm an IT audit, I don't understand. If you're doing home office, what the home office mandate is. You need to understand in order for you to do the scope. That is one side of it. The other side is you will come and say, okay, what are the assets of this entity? Assets, what I meant is information systems assets. What are the applications or the software that they're employing? Sometimes the applications is not only the core applications, there are other applications that serve security applications, monitoring application, a lot of other applications, softwares that are not for the business, but for IT itself. So you need to understand that. The one is for business, the one is for IT. You need to understand the hardware that is in use. The screen is a hardware. These things are hardware. You need to understand, because those might not be of your importance, but you really need to understand because it's a cost. Who's responsible for, how is it maintained, and all of those. So secondly would be the assets. Third is the people who are running the IT. How many people are? Number. Do they have a job functions? And noted. Once you have that, then you could only start. You merge these two, the inventory and the assets you have, plus the mandate of the entity you have. You merge those and you do the risk assessment. Now you could understand what are risks, what are not. Because these items, my risk is not a business risk. It is just the cost and the inventory, and is somebody responsible for, and how long is it going to last. If it was 5 years depreciation on the accounting, are they going to last 5 years? If I know these screens only last 3 years, and my depreciation is on the accounting framework, they're doing it 5, then I am having a problem. There's a 2-year gap between how I'm accounting the depreciation and the reality on the ground. Those are the smaller things, but those are the things that you could easily see or figure in regard of these items that I'm talking about. In regard of the applications that are core to the business, then there's a different issue. We've talked about security, we talked about data integrity, we talked about other things. So that is where you plan your audits, as we've mentioned. Audit planning, you set the scope so that each area that you are covering is important to the audit and also to the financial audit. Remember, we've said it has to be seen the materiality of the issue. Maybe these things are not material, I know, but on the financial side, if I'm looking at physical assets, these becomes important, isn't it? Or physical assets. So I need to include towards the physical assets. So IS audit would have an area for that. So that's why when you're doing integrated audit, you are doing the audit, you need to identify which areas and who is actually covering or how they are covering. In these days, IS audit accounts a big thing in regard of the physical assets. So you really need to have a plan for it and a way to test it, a way to verify it. Another things about physical assets nowadays is the whole thing is recorded in a system. So understanding that system and getting comfortable of that system of inventory is also important. Sometimes it is part of the SAP or part of the Oracle. Sometimes it could be outside of it, that separately used as a tracking, like guns that have a bar tags and stuff. You need to have an understanding of that if you're taking comfort over those numbers. So depending also, again, about the number of people that you have, number of hours that you have, the audit, how much you will assign, it depends the manager who's doing the audit, and also what year you're looking. Sometimes these things you could do every 3 years if the system haven't changed. Exactly. So that's where I'm saying you look at objectives. What do you want to achieve this year? Sometimes you could have a 2 or 3 year plan. Because once you, if it's your first year, I mean, I remember when we were doing audit, especially from the Big Four or from outside, it's not like the government where you audit this every year. A new client come in, it could be a big client, like Federal Reserve Bank. They've rotate every 3 years their auditors. So when you are the new auditor this year, there's no way you will be able to do the same thing as the last auditor. But you want to capture the main risk. That's why risk is very important, to understand the risk. In the first year, you want two things to do it. Understand the entity as much as you can. So you're planning a big chunk of your hours is not going to take testing. Actually, it takes more of understanding and walkthroughs, because you want to understand the entity and the risks and all of those. And then once it comes on your execution, you will target main risks. You wouldn't target smaller risks. You identify, or even you don't identify, but you target the biggest risks on your first year. Second year, you'll have a different program. That's why we've talked about one thing, unpredictability. That is the reason, because as you know more, you will change your way. So you started big, now you're going down one level. Next year, you go down one level. Third, by that time, mostly private, you're out. But in public, since you're not out, then what you need to do is you move around things, so they don't know where you will actually go to audit specifically. A new system comes in, it changes everything. We've talked about, because it regenerates, how would I say, business re-engineering would actually be forced. So the way you look at it also have to be changed. If either a new entity or an entity that exists adopts an Oracle, where before it was manual, your whole game plan changes, your whole audit plan changes. If you never used IS audit before, now you need more IS auditors. Now you need database and you will, that's why you will need more and more, or people to also have, how would I say, either both certificates or at least do trainings that are aware. So absolutely. So that's where I was coming to. You need to understand the risks and some of the areas and how to test it in general. You don't need to be technical about it. A lot of it, you could get away with it if you understand, because it's, at the end of the day, it's internal control. You are not supposed to be a coder, somebody who does the coding, or somebody who's good at network. But I need to understand, what does networking needs? Where are the security parameters or the security controls it should be? Then I could audit. I mean, to be honest with you, I have never been an IT guy, meaning technical IT guy, but I have been doing IT audit for 20 years. Yeah. I'm not an expert on encryption and all of those, but when they talk about public key and private key, I do understand. Exactly. Your audits, yes. It is an aid. You just need to understand. That's why once you've got access to the papers, you will see it's not very technical. It's theory and controls. If you understand the controls, I'm not saying it's 100%, but you could get away with literally more than 50%, probably close to 80%. Change management, you don't need to be technical. Disaster recovery, you don't need to be technical. The areas that you need to be technical, but those you could also hire. Plus, you have to understand, just like statistics and all of those, you still be an auditor, isn't it? I did an insurance audit when I was at Sun Life, insurance audit. I'm not an actuarial. how would I get comfort over the actuarial process? One thing I've learned is they do have their own standards, isn't it? So now I could keep them under standards, whether it's the people who are supposed to do a CPE credits or whether they supposed to have a peer review. So my job is, we could have an expert, but my normal day-to-day audits, I will make sure that they met the standards. Again, going back to standards, that's where they will help you. If somebody does what the standard tells them, you know that if they're not following the standards, then you know that there is an issue. Yes, absolutely. On all of them, yes. But you could have a general knowledge. Again, as an auditor, your bread and butter is three things, and regardless of what you're doing. You might not know the business, but three things that we've talked about, you need to understand. Again, it goes back to the same as planning. That one is within IS audit, but in general, even if you're not IS audit, process understanding, you need to be able to read policies, procedures, standard. You need to understand the business. You need to assess the risk of that business, and you need to identify the controls that mitigate those risks and test those. That's all you need to do, regardless of what you're doing. On the testing part, where would the technical part comes? Maybe on the testing part, isn't it? That you could ask an expert or somebody if you wanted to do it, but you've already done the business understanding, you've mapped your risks, you've identified the controls. You could hand over the baton if you want and outsource that part. Exactly. So that is where CCNA, somebody who has the capability to look at it, configs and everything. Oh, you might need one guy to help you with multiple audits because he could get the configurations rather than asking, and then he will help you with it. Because now you've already done almost 2.5 out of the 3. You've only left the testing part, even the controls you've identified. So you could use somebody to help you with that last piece. Absolutely. What?
Then you can produce or you can know the controls and
Absolutely, 100%. That comes again when I say technical. When they talk about, there's things later we will see that talk about audit trail logs. It could be database, mostly it's on the database level, but sometimes it's security. Majority of them, the reason auditors talk about because it's an exception report. But when they don't have that, they will tell you everything is logged on the database. You go and look at millions of logs because every keystroke is logged on the database. How would you know a billion records? So unless you understand what is important, the business, unless you understand the risk, unless you understand what is important, out of that sea of data, you need to pinpoint which is important to you. Because a database administrator would come and say, I have everything. What do you need? Tell me. Because even though he's an expert, he has no intention of knowing which is risk, what is important. You, the auditor, will only know what is important to you. Because this technical guy will tell me, okay, on network configurations, what is important to you? I'm only technical, he will say. I could get you because nowadays, even have you seen where this AI came from? AI came from, yes, research and all that, but majority, who was the first to apply? Was the network guys. Because initially they were capturing everything, but then they say, like, we cannot go through all of these, even like as a normal operations. When you look at everything that the network is having, outside or inside, and then they need to supposed to look at intrusion. How would they know what is important, what is not important? Then they realize we could build a baseline. If we know who attempts to log in at one time, then we could identify which one is abnormality. So AI came in because of the network technologies and all those, the first people who applied. And it's still there. If I wanted to know what ports that I used, what ports that are not used, it all depends risk, because there are multiple ports on a network. Only when you identify risk, understand the business, identify the risk, then you will know where am I supposed to look at, technically speaking. So technicality or technical is very important, but only it comes after you identify the scope, identify objective, understand, yeah. At the end of the day, because this is a tool that the entity is using it. So you need to understand why is it using, how important it is. As we said, two systems or their security are not the same because the entity is not the same. Yeah. This is a wrap up, and we've already talked about the different areas that we've covered today. All of it is within the planning section. So it shows you initially is the IS audit project. Basically, when you said, okay, I'm going to audit this entity, and you'll assign a manager or a person who will deal with that entity. The second thing to do is to identify the audit universe. Basically, what are the assets or information systems assets within that entity. The third is to understand, or high level, once you identify the entity, to have an understanding of their business and how these assets interact with the business. As we just said, if there's an HR, are they using a system and what it involves in? Fourth, and the lastly is, once you understand the business of the people, you understand the assets, you layer those two together and you will assess the risk of those two together. That gives you your initial planning or preliminary risk assessments. As you could see, and those are the process that it follows. Because once you do the scope, each section you will still have to do risk and control matrix, isn't it? Risk, identify each. So that's the detail level. The reason initial preliminary is you will identify additional things, or some of them that you thought it was risk, you might find actually it's well managed during execution. So this is the reason we call preliminary. So this is an early stage. During the execution, you will continue the risk identification and control, because each area now you have to do walkthrough that's detailed enough for the area. Then you'll have to map the same thing, the walkthrough that you did to a risk. And then you will map that risk to controls that they have. And then that is what you're going ultimately to test at detail level. So in recap, basically, this is what it is. Any questions? Any? I don't think it's any different. This is a control sheet. I have used similar one previously, especially when we are doing the initial planning phase, and when we're trying to understand from IS audit system, from IS theme or thematic IS audit. This is something that you could use to help you understand the entity. It's about 100 questions maybe, but they are divided into different sections. These sections, you will know more about it during the, I think, Unit 3. Unit 2 still we'll be talking about planning in detail, but this is mostly the different areas. But in order for you to have an understanding, then you need high-level understanding on the different ITGC area. So the first thing is the information management. So this is basically general information management. Remember, on COSO, we've talked about communication, information and communication. So here you will just wanted to know, how does Is there any monthly cost information or revenue or anything to that nature? This is when you're trying to understand the organization and its environment. So high level understanding. What type of information does? Yes, so that's the reason you will use this for different organization and you will jot it down your notes here. What are the key risks you will identify? As you said, from one entity to another, the same thing could have a different risk. Whatever they tell you, just high level, you will just jot it down as your notes. So what systems they use to capture data. So again, with different functions, depending on their mandate. I mean, if you're looking at nuclear entity and if you're looking at a medical hospital, when you're looking at water supply, you're looking at electricity, postal, each one have a different set of information, different set of requirement, different set. For sure. Questions are just generic, so the importance of it could be either very low or very high, but the questions are applicable to anyone. It's just one of them is important, one of them might not be important or relevant, as you said, but it's just generic, these questions. Determine.
Any financial fee or charges that is justified for emergency, are they being reported to be concerned?
Absolutely. Question is, one of the things said if they are using the system, is the system generating or is it capable of generating those type of reports?
Bypass, the authority is not being that if we upgrade us into our information system, that accounts people are not getting the information related costs and revenues through the information system. I have seen in railway audit that the railway management has barred that this information is not into our account.
So this is very important to you because as an information systems order, if there is a system available, is it producing what is needed? Because remember what we said, IT is for tool to help the mandate and management, isn't it? So information to get to the management is important. Is the system capable? Sometimes it's yes, but nobody bothered a report to be issued or report to be devised even. Because remember, so now if they are doing any forecast, that will be based on wrong information because it does not take into account the fare increases if they're doing any forecasts. Determine if management submit performance information to other government portals. Sometimes it does. I mean, I remember UAE, there used to be a performance at the Prime Minister's office. So a lot of times the Prime Minister's office, the same here, it is the engine of the government. So in certain areas, it's called center of, so are they getting information from other agencies in order to make a decision for the government?
Performance information.
Yes.
If we say that the performance is being shared to the people who can contribute to evolve the system, they are not getting the information.
Another thing, especially if it's a government level, a lot of times governments, when they come in, even here, I assume they would have a strategy. They would have a KPIs. We will achieve this. We will increase the education. We will increase this. We will do this. We will have more efficient railway transportation, isn't it? The railways, let's say, that is one of the KPIs. So we will increase by 10% or whatever the number is. Now this has become, the parliament wants to know, but now the audit office, if it's performance or a normal audit, it's not only financial, and that is where the problem sometimes comes in. You're auditing the entity, you're auditing the financials, but anything that, again, as you said, that is important coming out of from this entity and their mandate for the government, you are basically the eyes and ears of the parliament and the public, isn't it? If they are reporting something, data integrity is the issue. Who does that? Data integrity. In the integrity, we're talking about confidentiality, integrity. The numbers that they're reporting, are they accurate? Does the system gives me guaranteed or assurance that these numbers are correct? Or are they fudging the numbers? Once it comes out from the system, they're putting in Excel and they're sending it, making it look more prettier. Because now I take, again, that's, remember we talked about the third-party confirmation. Now I take, if there is a central portal for the government and they report it, I took those numbers. And when I'm auditing the railway, I came down to them and see if the system supports these numbers. I have an independent information. Now I'm getting this information from their system. If there is any difference right away, I'm looking at what a difference. Exactly. So I'm looking, and if they could explain the difference, it's fine. If they cannot right away, I have an exception. Yeah. So data integrity, especially what we call information management, is very important. It's not financial, it's information. Ministry of Education, they say this year, kindergarten or students, we've increased by that number. When the government promises was that, and it was the strategy already submitted to Parliament and passed. It's basic performance numbers. Again, it's a performance. Is it accurate or not? Because the systems will have to show you, isn't it? All the students that has been registered, if there's a system, then the system is there to be verified. The integrity, again, is very important. Much more sometimes important than the financial cost. Yeah. Depending on the topic, exactly. So this is service delivery, as we've just talked about, whether it's student enrollment, whether it's a student graduation, whether it's, so is there any information coming out? So here, mostly it's just general. The first part, that's why I said, is information management. It is very important. This is depending on the mandate. Once you understand that, that puts responsibility to the IS, because the system that's generating that information is IS have to audit. Again, the integrity. All of this is nothing other than identify what information comes out or the management is reporting or management is getting to make up decisions, and if that is accurate and complete and also confidential. So this is very, very important. This is high level. Now you get into the IT department itself. Does the IT has a strategy we've talked about? If it doesn't have a strategy, that's the first thing. Right there is an exception. It's like, because what standards would you be holding against if they don't have anything? Yeah. So is there any IT steering committee we talked about? Maybe they have it, but maybe it's just within the IT. That doesn't serve the entity and the organization. Because if IT is only meeting themselves and they deciding what is good, they will all decide what is good for IT. They won't decide what is good for the rest of the business. See, I didn't know, but that's the reality. Yes.
Being lodged by the customer of daily.
Yeah.
We are being forwarded to the IT section.
And IT is only one who's absolutely.
Complaints go to that section. They are being deleted.
That is the problem. It's supposed to be routed to the right person. It needs to be routed. If they are the center receiving it, because they might have a system that they created, the grievance system or something like that. But that has to be, that's what I said about, it's almost like help desk, isn't it? When the issue comes in, you need to label it. You need to know who it's supposed to go, and it needs to go to that person. And at what time do you have a performance metric about, we talked about people just deleting or closing tickets because they don't want it to change their performance metrics.
Not be able to see that people are complaining that we
About them, yeah, exactly. It should be going to them.
But we could not get the ticket, or we get the ticket, but our thing was put on two sides.
Absolutely. That's supposed to be going. So the steering committee or committee that deals with grievances is supposed to be with all the concerned parties, not only with IT. Entity has again, policies and procedures we've talked about. So if they don't have policies and procedures, right there you have a finding, meaning you might not use, as we said, ISO, but you say, go ahead and develop policies and procedures in regard of these areas. So you will identify the areas. And mostly it would be the different domains, security, change, operations, all the different aspects of IT. Yes. There is a different levels. A lot of times when we're talking about internal control, I remember on, especially in US, there is this SOX 404, which was a law that mandated it happened after Enron. It mandated all the businesses to certify not only on the financials, but to certify also the internal controls that produce the financials. So if there is anybody who did any manipulation, it means that either you are aware of it or you, as a manager, you're not aware of it. Because previously people used to certify the figures, especially the CFO, CEO, they used to sign and say the figures is good to the best of my knowledge. Now it's not about the figures, it's about the process that produced the figures, which means the internal controls that produced it. So in order for you to verify that, then again, that's where IT and everything, internal controls became very important. Because everybody now, you are certifying that these are fine. So what happens is when you're talking about internal controls, if I don't have policies, then there is a big issue right there. What you are saying is, what impact did that has? Okay, so let me answer it in two different ways. One way is when I'm concerned about the person supposed to sign the internal controls, which means is he does not know what could happen. So it means anything could have happened based on that CEO or that minister in this case. He has no assurance. That's why the business that we are in is assurance. He cannot assure what could go wrong. So that means it's a failure, not only on the policy or IT, it's all the way to the highest level. And that's the whole reason 404 said you need to certify, meaning you need to be aware what's happening all the way down. So now if he's responsible to certify, he's responsible for the lack of policy, even at division level, very low level of department, because it's actually his sign saying that internal controls exist or it doesn't. So policy and procedures, if you remember we've talked about, those are what we call entity level. It's pervasive because this IT doesn't have. Security of IT cannot be guaranteed. Who has access cannot be guaranteed. Ticket could be changed, cannot be guaranteed. Now it has a much more bigger repercussions. Okay, remember I said I will answer two ways. Yes. Yeah. Correct. Correct.
You can say that there are 1 million instances out of 1 million, 30,000 instances are there. If the ID is either short or too long, it's definitely due to lack of information.
Okay. So remember I said I could answer this in two different ways or two different angles. One angle is the but what does it mean to the higher management? It means they cannot guarantee what is happening. So that is an internal control issue. So let's put aside the internal control issue. What you're talking about is impact, financial or otherwise information. What impact did it have? The only way to do that, a lot of times, normal sampling is not going to give me the impact. The only way to do that, especially if it's a system generated thing, is for me to take a data dump. data analytics. So initially I need to take the whole data and then analyze. So in this case, what am I analyzing? Anything less than, so I will program my analytic, say the field, especially that field, if it's less than 15, pull all of those data out, all of those transactions out. So I could easily get, we've done that. So I could easily get, because the parameters, you will set the parameters of the field. If it's less than that parameter, you will pick up that transaction. So now you know all the IDs that has been keyed in incorrectly. So now what happens, the data that somebody is relying, as you said, it could be 10,000, it could be 1 million. Now you know how much, and that is, remember what I told you about the performance anything, data integrity is a huge problem. And especially if you're doing data analytics, a lot of times what you go against is, imagine you're going through against that. At one time I was doing a system that is the pension, similar to pension. And we've also done the pension, but system of social welfare. Social welfare requires a lot of requirements in order for you to be accepted. Either you are widow or you have no other job, you don't have a land, you don't have other properties. I mean, a lot of conditions in order for you to get money. So first and foremost, before I could even get to the conditions, if I'm getting a data in, 10 years ago, there was no national ID in US, in Emirates. I'm not sure here. So first and foremost, whenever you're getting a data dump, one cardinal rule always is, how can I identify what is a unique field that identifies a transaction? First thing is the unique field. ID gives you that. If you don't have ID, then you almost, because everything could be changed. That's first thing. Second thing is that that field has to be mandatory on the application, because if somebody forgets to input and the system does not require it, now you have ones that are blank, the ones that has something, you really cannot run all the conditions that I was talking about. Basically, in a simple terms, that data, I don't like to call it garbage, but it's unreliable. I cannot test what I needed to test. And manual does not get me anywhere when I'm talking about millions of transactions. So data integrity and data, how would I say, in data analytics, we say data cleanliness or data cleansing. Before I do anything, I have to clean this data to make it usable. Again, going back to the application inputs, the reason input controls are important is if I have good input controls, it will avoid me all of that. So the data is more reliable. I could do my analysis. The reliability is not only for my analysis, isn't it? Somebody is supposed to be using this data to make decisions, to make transactions. If they cannot tell whether it's a woman or a man, or that field is not required, how would you be able to give, let's say, even on normal payroll, I audited payroll. If male and female field is not mandatory, it's there, but it's not mandatory. I could fill, but the transaction could go. How can I guarantee somebody who could take a widow leave or somebody who could take a maternity leave? Now I have to audit every single file, isn't it? Imagine if Pakistan Army, how many people are there? 1 million people? So there's no way that you will be able to give assurance onto that maternity leave, whether they took it or not, if that one field is not mandatory. If it's mandatory, now I know the people who take their names or whether they are female or not, isn't it? Simple as that. I could just run quickly, comparison of the names or comparison of the person who took it. So I'm checking who took it. Is it a female? Maternity leave. Right away, if somebody who's identified as a male took a maternity leave right there, it could be a mistake, as you said, sometimes it happens, but right away, those are my exceptions to look at. Again, I'm helping them even to cleanse their data, isn't it? That I could pick up right away. Even if it's a 10,000, I say 10,000 males have taken a maternity leave. How come? They will realize, oh, it was just somebody misidentified when they were doing the input. Go and clean now your data. Because policies are decided, isn't it, on how many, let's say, female are in the army, how much their maternity leave, because some people will make decisions based on this data. But if there's only 5,000 who took it, but actuality, it could be more, then the decision could be different. So it is very important to data to be clean. If you're doing data analytics, to make sure that the topics that we are talking applies on what issues that you are dealing with. Again, as we said, it depends on also the entity that we are talking about. So going back to the issue we've talked about the policy, whether they have or not, and the impact it has, it all depends on the item that we are talking about. Some of them you could trace it and find out. Some of it, it's just generic that you'll say, just go and build a policy because it's just generic. But if you're talking about something very substantive, then you will have to actually look at the impact of that exact tax evasion. Exact. You really need to look at the core issues that might arise. Again, this is the whole reason IS audit is important. When things are computerized or is it a system, could you get an assurance? As I said, if that controls like a password exists, then I could rely on. If it doesn't, now I have to go to substantive audit. Internal control doesn't help me. Basically, it means that is the whole thing about IS audit. It is part of the internal controls. Regular auditors, you do internal controls to reduce the level of substantive audit that you have to perform. It is the same thing. Now I cannot get a reliance. Now I have to rely. A lot of times I said that to my colleagues. I said, physical access or physical inventory things, it's none. It's all onto you guys. Don't rely on this system. At one time, it was a payroll that was going out of favor and they were building a new one and they knew the data integrity was crap. So I said, don't even think about there is a system exists. Just do your normal, everything has to be file-based. And they used to say this, like, because the files weren't upgraded. I'm like, what is the point of having this system then? Or everything is on the file, like leaves and everything. So how would you rely on the system? I said, don't rely on the system. Just go look at the ministry. If it's 1 million, good luck with you. If it's a few thousand, then do your sampling selection. And based on that sampling, go to the files and let them bring the files to you and you do. Yeah. Exactly.
But what we have cats available, why not everything?
Absolutely, absolutely. What?
We don't need compact testing anymore.
No.
We have cats.
If you have CATS tools, a lot of times what we've done in the CATS is not only that you could do specific to CATS, or IS used to do it, or what we call IS audit. We used to do our own, and helping the teams that we are part of it. But there were a lot of things that we used to do, let's say just the accounts alone. The sampling of the accounts, we used to give them all the manually entered general ledger postings, the ones that didn't come through the subledger, through the system, because mostly they're more riskier, anything that's manual post. So we could easily give you how many transactions that are manually post, so you could test it separately.
But just to compact testing, right, these areas need to probably issue. The output of compact testing is
Yes.
but once you have that source available and hold that available, you find and use available, you don't need that. But we are like on the whole data, we don't need that get to the flow of
Partly true, but partly also, and I wouldn't say untrue, but partly requirement. I wouldn't say compliance testing, but I will say internal control testing.
But in some areas again, you need to apply expenses.
So that's where I'm coming from. The compliance one is still going to be needed, because if it's a law, whether it's met or not, you will have to test it. So if it's a government law that is issued for the part of the mandate, I need to test that. And it's not only substantive. That's why I said a lot of times it's not only financial that you're testing, but you're testing also mandate issues. Information, that's why information becomes important. If the mandate is, let's say, if you have a register, which probably I think in government register, I think NEDRA was the one. If you're required to register every born in Pakistani and every death, now you will have a time frame for death or time frame also for child. Within 30 days, they have to be registered. If I'm auditing NEDRA, or whoever is auditing, and if that mandate exists, you're not just going to go account some budget. And I'm fine. Security, but also this mandate about the registration. Now what I do is I go to whatever hospital. I could get all the births at that hospital. I could verify whether it's been registered, let's say within 30 days, if the mandate says 30 days. Now I don't have a record of all the births, isn't it? But what I could do is I could target different city or within Lahore, different hospitals, and I say, okay, give me this. Has it been registered within 30 days? Because now I'm looking compliance. If they didn't register any of them within the mandate, now I have an exception. So it's not about finance or substantive testing. Compliance is per the law. Sometimes you will have to do it regardless of your substantive testing. But from financial perspective, internal control guides you how much substantive you're doing. The data analytic would help you, but again, as I said, I'm not sure about Pakistan, but in US and a lot of other places now, the financial statements, the management wouldn't sign unless they sign internal control statements. So now that also requires you to look at internal control in general, not only to help you with the figures. So you would have to do almost like a balance, but still your substantive would be reduced much less, and it will be much more, how would I say, focused. If you're doing just the accounts alone, we used to do manual, we used to do anything that's being entered, weekends, anything that's being entered, let's say, after 12 o'clock, anything that seems unusual. You tell me what is unusual, and I could give you the population. You sample however you like. That population could be 5, it could be 10,000. You come up with any scenario that you think is risky, that you want to test about the accounts, I will be able to give it to you. Because as you said, the cats are there, the data is there. All you do is a quick programming or quick SQL, just pull me this data, you will have it. That's why I say the technical person doesn't have to be the auditor. You could use it while they're sitting on their desk. Just say, I need this, give it to me. A lot of times data analytics, I used to go to, I'm not an SQL expert, but I used to go sit with them and I said, I need this, 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 and data. If it's not correct, I know, because when I run, I come back, I said, no, you didn't give me that data. At one time, I had to go back Ministry of Labor 5 times about data. That's not clean. At the end, I said, you're just giving me garbage. And you're spending me, literally, anytime I take that data, for me to either cleanse and try to make sense of it, might take me a week or 2 weeks. I come back and say, it's like, you gave me something that's not good. No, but you realize by the time you go 5 times, you realize data is garbage. Nothing you could do about it. That's why I said, it's like, you cannot go analytic or analyze any data if the data is garbage. So basically, what you come up, actually, we went all the way to the minister, telling him that your data is garbage. I don't know how you're making any decisions, or you're giving.
Please give the data in Excel.
No, that by itself is a.
Yeah, and that auditor is going to see this if he does not know regional data.
That is a must. I will repeat 100 times. One of the rules that I've learned in US is anytime, it doesn't matter if it's a report from a system or Excel, anytime you receive your request, because mostly audit, we request information, isn't it, data to be given. you need to verify that this is actually complete data. That is the first thing. So you say run it, whenever they are doing it, run it, and let me see on the system by myself. If it- Exactly. You need to completeness of data. That is before you use that data. The first thing you need to verify is completeness of the one that you request. It's not completeness of every data, but the one that I requested has to be complete. If I request 10,000 transactions, I need to make sure the 10,000 is the one that I requested, not the one that they manipulated and took off whatever transaction that they want. People do that. If they know the issues, they might take and say, especially at database level, they have access to it, the SQL, because when they pull, they could delete whatever. I request something, I go back and I say, rerun it. Let me see, as you say, certain totals match, not only the amounts, number of the fields, number of whatever others to verify. And then I will say, okay, from now on, I could do my next step. Yeah.
That's why all
Yes. Absolutely. That is, before you start anything, the completeness of data is the first thing you verify. A lot of times what we used to do is, we will look at the data from the GL, isn't it? I said we've talked about the accounts. So accounts I'm pulling from GL. At the same time, I will pull, let's say, from HR and from, because if I'm looking goods and services, mostly the payroll and then goods and services. And I know which accounts I'm looking. I mean, I remember on UAE, 21 is payroll, 22 is goods and services. So am I pulling GL? I'm also pulling payroll, and I'm looking at the procurement system. Because any difference also of manual, they would able to be explained. So payroll, there was payroll that used to be run, people who are new or people who are leaving, used to be run from the procurement side, because check has to be cut. So now even the difference I could account for. So I'll pull the GL, even though it's the same system, but now I'm cross-checking what I've been given to, but what I could also pull. And if there's any different, I need to be able to explain that difference. I'm not saying there cannot be difference, but difference can be explained. So payroll, if it's not, it means there is a check being cut, and that also uses a specific account. So I will pull that account, it has to match that difference. Then I could run my normal procedures, meaning which ones are manual, which ones are weekend, which ones are this, then I could run. But first and foremost, before I run, it's to check the completeness of the data. So policy, so those are all of them are policies: IT security system development acquisition, IT operations, BCP, communication awareness and monitoring. Do they do evaluation and policies? Procedures to match the policies also. So policy and procedure always goes together. Org chart, again, goes back to the strategy and everything. Basically, people, when we say org chart, we don't mean just the depiction. What we mean is job functions, roles and responsibility, job requirement, everything is there. So whenever we talked about IT org chart, we meant everything that follows with it. So roles and responsibility is defined. So certain key posts, you do know of the structure. If it's missing, even at the corporate or ministry level, and it's being out for a while, then you know that there is a problem or weakness that could come in. I mean, sometimes that is where audit is important, sometimes to even aggregate, isn't it? If the government now, let's say, is doing IT, and a lot of implementation in IT, and you don't have a lot of ministries or agencies are missing, let's say, database analysts, DBs. When you aggregate, then you realize this is a government-wide issue. So now policy could be made maybe to entice more, pay more. So you could have people. So Audit also could add value on overall government decisions when you aggregate things. But it all starts about initially identifying at the individual entity level. DRB, disaster recovery plan. PCP, business continuity plan. Yeah, the other one is disaster recovery plan. So again, this becomes an important whenever we look to the IT. Even though everywhere else is important, IT is even more important because of the changes of the IT and landscape and the technologies and the learning. So you ask people to actually have the skills, but not only skills, are they going frequent training to update themselves or upgrade themselves? It's very important. Again, that goes back to the whole governance things, training and skills. Does the entity establish information protection, confidentiality, policy procedures, again, policy and procedure, but this is specific to security, retention schedule identified. This is if they are having data backup, do they have a retention? Sometimes government law mandates 10 years, 5 years, all the financials to be kept. Then every data then that translates to transaction that has a financial impact have to be kept at the same time. So if they are using system, then they have to back up and those have to be kept. When that happens also, there's additional responsibility. Whatever the way that they are keeping tapes or and what do you call discs and everything, it has to be readable. So you have to ask yourselves or to them, are you testing it? Readability of the backup. Sometimes actually it's used because if the system goes down or if somebody needs an old that the system doesn't have, then they need to use the backup to provide that information. That by itself sometimes acts as a test when actually the backup is used, either for life reason or for other people or for even auditors. If you ask 2-3 years ago data, they say it's not from the new system, we have it as a backup, we will have to pull it from our backup. So that shows you if it's readable or not. But that as a test have to be checked, is the readability of the backup data. Third-party services, if there is any, it always have its own rules and everything and the contract and everything else. I wouldn't bother you with that now. It's a whole domain. So here, that one first is just a general or governance, IT governance related. We might leave it if you guys want it as that today. It's almost 3 o'clock because the rest, probably on the third day, you will understand even more when we go through ITGC. I think what we've studied today, this part, the governance is more important, even though governance it's a domain on its own, but at least it's mostly deals with the understanding of the entity, understanding of IT department, how that is related to the entity itself. Any questions? Examples? Anything that you would like to share? How that would apply to your current engagements, future engagements, anything you would like to either ask or share? Be more than happy. Would you be able to apply this, what you've learned so far, to your entities? Because some of you might probably end up, you know that we will probably be doing pilot IS audits. So some of you might be selected to be part of it. Yes. Once you have to apply, then you will have to specifically ask. It gives you an idea what they have or not. I mean, you will verify, but at least your initial interview, it helps you rather than remembering everything. You could just say, do you have, you see. What happens is when you are interviewing, then if they say yes, you will basically say, okay, provide me this, the policy or whatever that they say they have, or copy of what they are saying. And then you just noted it for yourself. And you will include it as your document request to understand even further about the entity.
This year I have conducted audit of 4 IT audit. One of the findings I come across was 165,000 transactions
I find that these transactions related to premium collection in year 2022 and 23, that the financial year audit related score. I have found that the premium collection figures were related to 1960 to 2022. It created a doubt that how this was authorized by the person. Because postal life insurance, there were 5 different regions like Lahore, Karachi, Islamabad, Peshawar. I found that these premium collections were related to 1960 to this. I found and we are given question that who was the authorized person to authorize. At the end of the day, during exit meeting, it was found that the KPOs entered the transactions of related to because it was a public sector organization, and in 20 and 2021, it was incorporated as public limited company. They digitized the data. It was the question where I would like to make this kind of procedure you have explained. How can I find these situations like inherent risk, at planning phase, detection risk? How can I find that situation? It was included 580 million rupees premium, which was out of which some of the transactions were made during on maturity of the claims of insurance. It was my question during that meeting. How can find in reference to the IT audit that who authorized them to enter these transactions in the 2022 and 23 financial year?
There's a different ways. That by itself initially is not an IT or IS audit, but it will come to it. One of the ways I remember financial auditors used to do is whenever you come in, your first thing is to compare this year and last year, isn't it? To see if there is a big shift. So if the premium has a big shift, and also the same thing, claims would have a big shift, because now you're entering an entity that didn't exist before. So everything that entity comes with it was, as you said, from 62 now, it means all the claims from that would have to be entered into the system, and all the premiums collected from 62 to 2002. So right there, you will see a big fluctuation or big delta change. So that is your first indicator. Second question is then, what is it? So once they tell you that there is a new agency that's being added into the pension or the life insurance, then you will say, okay, which one is that? How they entered? What system did they use? Who? Then now you pass the ball to your IS audit. You say, please audit not the old, but how that process, basically it's a data integrity audit, because you want to make sure that everything that they entered is correct. So whether they use data analytics or whether they use anything or both data analytics and file review, because data analytics, all it helps you is, as he said, pull all the potential exceptions, and then you need to sample part of those to see if all of them are true or not. Because some of them you will realize, because we've done that a lot of times, there's a lot of false positives. You pull potential exceptions, then you will realize, then they will tell you literally a story or why these things are the way they are. Some of them is data integrity, some of them is, as you said, could be a case that is wrong. Because now if I'm entering 1 million transactions, it's easy, 1,000 transaction that is bogus to be entered. So I could make a claim, because it's a new system that I'm entering, isn't it? And I'm not actually collecting cash, I'm just entering records. So I could enter a premium record that was 65, so I could collect a death that is just very recent. That is the risk in those cases you are running. So I will probably scrutinize more of the new claims that they are actual existing people that worked on the entity that are claiming their death certificate or death in compensation. So initially it will have to be the fluctuation of the financials, but then secondly, your issues is basically two things. One, did this entity financial wise, you will have to verify how premium was transferred to the life insurance of that amount. So you will have to figure out that a way. That's a one big risk, inherent risk. The second inherent risk is the claims that are actually coming now. Are these people actual people that existed that paid premium? So I will, those two, which is normally any insurance, those two premium and claims are the risk, but this one is, since it's new, it would have its own focus or additional resources attached.
Yeah.
No, because this basically said there was an entity that wasn't previously government entity. Now it's considered as a public entity. So now it's coming, it was moved into the government column. System previously, now it's been moved into the government system or the government pension or the government life insurance before they might have. So that's why I said, whoever they have the life insurance have to submit all of those premiums, isn't it? Or whatever they either collected or whatever the balances are. Again, inherent risk, yes. But now it's new, it's shifted, it has its own risk. Because remember, the ones that were existing, a lot of times, payroll, I've realized, and pension and everything, you always have a big risk in your existing because you don't test as much as the new, because mostly who we test? People who are leaving and people who are coming. The ones who exist, who are getting their paycheck, we test, but we don't test as much risk as the new entrants, because new entrants, I'm checking who interview with them, who the salary amount, everything I'm checking. The existing people, we don't go back and check their certificates or their salary or their, I mean, here and there we check the salary, but a lot of times they don't go to the same scrutiny about the leavers and the joiners. So that's why when the new entity is entered, I'm looking at bulk of people who are coming that will become part of my existing. I need to make sure that they are entered correctly. Any other questions, examples? Anybody who is either doing IS audit or who is planning to do IS audit or wants to reflect on what's potential coming into his entity or audit agency? I will find out, to be honest with you, I still don't know. I know that there is a quiz, but I'm not sure if it's per module right now or by end. I'm assuming it's at the end, but I will double check and let you know. I'm trying to also get all your names so you guys could get access to the e-learning system. So I will send you, or I'll ask Ms. Fatima to share the link once it's being, you get access to it so you could read the material. So I don't think it's per unit most likely because it's the end of the unit, but if you need any practice or anything or similar, I could ask the person who developed methodology if there is any practice quizzes that could be had. Any question, comments before we wrap up? Thank you very much. You've been a pleasant team.